love that setup on that setup. I want to take that trade. Let me go get my laptop. You know what? I left my jacket inside. Is that Santa's? Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, make sure to do your own due diligence, see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, guys, we are back. Welcome back, everybody. Hope you're doing well, and good morning to you. We have got unemployment claims coming out in just a few minutes, and I don't know if anybody else noticed this, but look at Bitcoin. Feeling a little FOMO here because I did take profits on Bitcoin, but there it is, 103,000. Kind of a beautiful thing, not going to lie, to see Bitcoin cross the 100,000 mark, closed over 100,000. Right around, well, right around last night here, which is crazy. So awesome to see. Sorry for the echo, by the way, guys. When I run the show, it's obvious that it's me. It doesn't look as good, but we got Chandler here in the background now. So what we're looking at here with Bitcoin getting up into 100,000, pretty cool. I mean, shows, if one thing, it shows the market's risk appetite is very high right now. I mean, Bitcoin is inevitably a very risk-on asset. It typically performs well when the market itself is doing pretty well, and we see that clearly. You know, stocks are doing real well, which gives Bitcoin sort of the A-okay to run heavy. By the way, on the intro of today's video, we had DNA Funded showcase. They are one of our newest sponsors on the show. So take a second. If you haven't already, if you're looking to get funded, check them out. We've got a promo code with them. It gets you a nice discount off of everything that they offer there. And you can check out all the rules and different challenges and things that they offer. It's quite a cool concept and a really professionally run group. So if you're looking for a funding program to check out, consider looking into DNA Funded. The link is in the description. And also, Chandler, if you don't mind, if we could get that added to the description as well, that would be great. That way you guys in the audience can find it there as well. If you're watching this back at a later time, we'll have that edited and changed up. Okay, Nick, what's your bias for the dollar today? Well, the dollar's been really strong recently. Well, as in like the last few months. But then pulling back a little bit in the last week or two. Where am I with the dollar? I feel like I'm kind of just in neutral territory, but in actuality, I think I'm leaning a little bit more on the strong side for the dollar, though I don't really have any setups currently. In fact, I think it's been, let me look, where's the euro on here? I just want to look at major currencies for a second. By the way, guys, we have 8 minutes to go until we get unemployment claims, which will likely move the markets a little bit today, so we'll keep an eye on that. So jobs data came out a little weak for the U.S. For Europe, employment change was more positive than expected. Services PMI. Let's take a look at economics. So Met beat -1 for that. I'm trying to get a better understanding of why the EdgeFinder is so neutral on the dollar at this time. Seasonally, it's a positive time for the euro dollar. CPI came in neutral for both places. So inflation comparison is even. Actually, let me check something. Inflation data. Yeah, that is not right. We need inflation data is off. Hold on. This is the joys of running a software company. This chart here. Right. Oh, wait, I'm sorry. I was reading this wrong. No, this is correct. Inflation in the European region is the CPIA, right? So that's the first currency. So euro inflation came in it as expected, and CPI, but is forecast. I'm trying to remember if I remember that correctly. Okay, yeah. So CPI came in as expected. Gotcha. Okay, so sorry about that, guys. Little house maintenance here. Anyways, let's see what we've got on the radar. So we've got just a few minutes to go, about 5 minutes before we get unemployment claims this week. Stock market's been up and away here. I've been on the sidelines, feeling a little FOMO, but to be honest, I can't really justify getting long on the indices up at these levels. I'm looking for broader pullbacks. If it happens, then I'm happily looking for opportunities to get long on things that I like. But I really don't think that I'll do myself any favors chasing here. I mean, and it might keep going. Like it might go up for another few weeks, but I really just know from experience that chasing the S&P 500, if you had done it in the last year, you probably made money. But if you've done it over, the last few years, you've had some real bad times if you've chased. Like if you chased this rally, right? Yeah, it might have worked for a little bit of time, but then it dropped hard. So I'm not really willing to chase. My point is I would like to wait for a dip. You look at the stock market's history, even in really, really strong periods like we've had for the last few years, which are abnormally strong periods. Even during that time, you still get dips, you still get pullbacks. So I'm not really willing to chase. If we get a bigger pullback, then great. And if we don't, then we don't. In terms of current setups for me, let me go take a look at this. NASDAQ bullish, platinum bullish, Bitcoin bullish. Let's take a quick look at Bitcoin. Oops, I didn't mean to click on that. So if I go take a look at Bitcoin for a second, trading above 100K, right? Look at that, 103,000 Bitcoin is ripping. At this point now, you've got to respect this area. This retest of 100,000 could be a buying opportunity, right? As weird as it is, this concept of a pullback now being the 100K mark sounds kind of crazy, but it's a trade I still kind of like. So I'm looking at Bitcoin interested. And please understand this is a trade. This is not I'm investing in Bitcoin at 100K. Even though that might actually be I don't know the future. Like let's say 5 years from now, it's at 500K. 100K right now sounds cheap, right? But I'm not talking about investing. I'm talking about trading this thing. And I do like the idea of a possible buy the dip or buy a retest, even if it's a brief dip. That is kind of all you get when crypto's going crazy is you get brief dips. Yesterday I was bummed because yesterday I was watching it right here and I was like, okay, if you come down here, I'm going to re-enter my trade. Didn't do it because we didn't get to my price. Price left the station without me. This has been the last 2 weeks for me have been very FOMO filled. I've been very much like wanting to get in on some things and then price just not quite getting to my level. And it happens. I mean, 6 weeks from now, 2 months from now, we might be in a different scenario. I might be in some good trades. I might be going through a losing streak, right? The point is, you always kind of want to be in this situation. There's always like one scenario that I want to be, which is I want to be long on something that's just ripping and I can just trail stops forever. Unfortunately, the reality of trading is that it's a very small period of time per year for me that I'm actually able to do that. I wish I could do it all the time. It's a great feeling. But right now I am very much sidelined on some things, watching for pullbacks. And if I don't get them, I don't get them. So for Bitcoin, I like the idea of a pullback to maybe 98, 97. Of course, 92, I still like that. So if we do pull back, right, and I take that trade, I could get stopped out. I could try again at 92.5, somewhere around that area. If I get stopped out, then I'm probably going to call it quits on trying to long Bitcoin. That's my game plan right now. Let's see what else. So Dow Jones, NASDAQ, S&P. Let's do some indices just really quick. So S&P 500, possibly willing to try long if we do get a pullback here. Small positioning for me there. If we get a bigger pullback, I like that a lot more. I like that setup around 58.80 for the S&P. NASDAQ, same kind of idea. Might be an interesting idea right around this pullback. If I can get that, I may look for continuation plays. That would just be a couple days sell off. If we get that, then I might even try for an aggressive entry on the long side there. When I say aggressive, I'm not saying, super high risk. I just mean that's not a very steep pullback, right? But I may still be willing to try it because I see the market is very bullish right now until further notice, until something changes. Anyways, guys, we got news coming in here in just a second. Let me just switch over to our all markets view. All right, so coming out in just 1 second, we're going to miss our breaking news today. Sorry, I was too close to the buzzer. Unemployment claims should be coming out in just a second. Let's see. Dollar index is slightly lower here. All right. So unemployment claims came in a little bit higher than expected, 224 compared to 215,000. Not a huge deal. Not a ginormous miss, but a little bit of a miss. No big reaction here from the stock market's perspective. Dollar index is a little bit lower. Gold mixed, silver mixed, oil mixed. Not a big spike, but let's just take a look at what that actually means for markets here this morning. So we're expecting 215,000. We saw 213,000 previously. What came out today was 224,000. Okay, so yeah, so you had a slightly weaker number. Yesterday, we also had slightly weaker than expected ADP, non-farm employment change. They revised the previous one down a little bit, 146 compared to 152. So far, I would say the jobs data that's come in this week is just very neutral, very not super shocking either ways, which from a market volatility standpoint is boring, but unfortunately, we don't always get ginormous moves off news events. And I explain that every single time. Every time we have a news event, people say, what? No spike? As if, the news only exists to entertain us, right? But the reality is that the 224,000 jobs basically was not too far from what the market's already kind of expecting from analyst reports and from research out there. They're kind of already forecasting for that amount. So it's kind of like if, the Weather Channel said it's going to rain today and it rained a little bit today, you wouldn't be very surprised. But if they said it's going to rain today and it was very sunny, you'd be really pleasantly surprised. You'd be like, awesome, they were wrong, right? So that's the thing about news events is it's really important that you understand news events are only as moving to the market as they are surprising to the people watching them. So no big surprise on unemployment claims. Let's see, where's gold at today? Gold completely unchanged. Really boring last couple days for gold. I mean, look at this. We've been a very tight range. Went from having these huge monumental moves, ginormous drops. I mean, these types of moves, depending on some of you like volatility, some of you dislike volatility. But yeah. I'm joining the VIP group tomorrow. That's awesome. Good timing. Tomorrow is your last day to get the 40% off for Cyber Monday. Actually, it's the last weekday. I think I can't remember when we're cutting it off, but it is cutting off at the end of this week for sure. Okay, so gold kind of range bound here, not a big movement either direction. If we take a look at silver, flat on the day, copper slightly lower. Oil had a big reversal yesterday, started strong, came back down. With oil, it is one of my, well, actually it was, it's no longer a bullish reading. I think it lost its trend score. Yeah. If oil starts to move higher, then this is going to go back to being a bullish rating for me on the EdgeFinder, which would be interesting. But what I'd be looking for, I said this yesterday, would be, break through some of this structure. Like if we can get something like this going, then I'm very interested in going long oil, but I'm not really seeing the momentum, right? Price is very, very dead on a lot of charts right now. It's interesting. You've got some things that are moving like crazy, like Bitcoin's just moving beautifully. But then you have some other charts that are just really, really choppy and kind of painful to watch even. Like gold right now, like this is an ugly chart. This is an ugly chart. And I always pick on this concept because I see it all the time. People who love to say, oh, well, I only trade gold. Or like that's one of the most notorious things that I hear in trading world is, well, I only trade gold. Well, it's like, okay, great. You trade gold. That's awesome. But why only trade one singular thing when the personality of something? And then people will say, well, I love the way it trades. They love the way that it trades when it trades like this. This is easy to trade if you're trend following the uptrend, right? Or if it trends down, you're trend following the downside, like people love that. But the thing is, you love gold when it's doing this or when it's doing this. Or if you are somebody who buys support, sells resistance, you actually love when gold does this, but you hate when it does this. People, I can't tell you during this time how many comments we got, people of saying like, I blew my account on gold, right? Because it just kept trending and they kept shorting it and shorting it and shorting it. And when it just kept trending, they blew their account, right? So the thing is, if you say you trade only one thing, the difficulty is not only do you trade one thing, but you all probably like when it behaves a certain way and you hate when it trades the other way, right? No strategy works perfectly well in all market environments, right? If you're somebody who is more of a mean reversion style trader, meaning you buy lows, you sell highs, you trade counter trend, you trade, you like environments where the market is indecisive and choppy, because then you can just kind of like, if you were trading the lower time frames here, let's look at the hourly chart. Like if you were in here buying support levels and selling rips, buying, selling, buying, selling, then you love this. But at some point you'll get an expansion of price. Price will start moving a lot more. So how do you survive those changes? That's a really important question. How do you, if you're getting used to a certain environment, if you traded gold and you made a lot of money during this period of time, right? But then this recent period has been more difficult for you. Well, you're not alone. You're not crazy for feeling like, hey, what the heck? My strategy's not working as well. No strategy is just a perfect, attack on the market, right? There's nothing where your strategy is just going to work all the time, because what might work in one environment does not work well in others. So how do you prepare for an environment shift? Well, one way is that you don't trade one thing, right? For me, I like to trade things that are moving with momentum. Right now, I'm looking at Bitcoin. Bitcoin's moving with momentum. I like that. I don't like trading gold when it's just stuck in a range and it can't get anywhere. So when people say, I only trade gold, okay, great. But you also only trade gold when it's in the right environment. So you probably only trade, like, if you're a trend follower that trades gold, then you trade gold very not frequently if you're sticking to your rules. If you're a trend follower and you trade gold, let's do the weekly chart. If you're a trend follower, you have these bursts of trend and then these long range bound periods. right? So what I like to do is I trade everything. I trade crypto, I trade indices, commodities, currencies, stocks. I like to trade things that have momentum and a good fundamental story. I'm not always right about their direction or what they're going to do, and nothing is, perfect all the time. But I prefer to sort of follow where there's opportunity and where I can find a good story and good momentum, and I like to trend follow those stories. So gold right now is there's just nothing, there's no interest here for me. It's just so choppy. It's indecisive. If we get something like this, right, you start to break out, start moving it higher, or you start failing out at support levels and a sell side bias really starts taking over, then we could look at it a little differently. But you just have to be cautious that you don't, gold can go into consolidation for 6 months. So if you are somebody who trades breakouts and trend follows, if you only trade gold, the issue is that if it stays in consolidation and you have nothing to trade for 6 months, you can't trade anything. And you're more likely to force trades because you're like, well, I have no trade, so I gotta force a trade. So I would encourage you just to at least do some back testing on other charts to maybe broaden what you trade. Maybe you add some currency pairs. Maybe you keep an eye on the indices, right? The indices have been moving very, very well this year. Great trend following opportunities this year. Oil, choppy as anything, right? Kind of a tricky one to get any momentum going on oil at this time. The dollar index has been really, really trendy here recently. Big downtrend for the first half of the year, big uptrend for the second half. So yeah, I mean, it's kind of why I do prefer to sort of watch a basket of things. So anyways, some yen crosses are also moving with some pretty good momentum right now, at least the last time I looked at them. Pound yen. Yeah, pound yen is pulling back a little bit here. But I mean, look at dollar yen too, for example. Like dollar yen, really trendy, really trendy. Now seems to be trying to trend down here again. We'll see how much downside is on this dollar yen move. I think for this to really trend lower, fundamentally, you probably need some sort of watch NFP tomorrow. That would be a catalyst. If NFP comes in really weak for the US, then dollar yen may actually look like a really great candidate. I'm new to the EdgeFinder this month. Can you tell me how to use the price forecast feature? Yeah, I don't really look at it too frequently, but all it does is it basically just applies a trend over what you choose. So if you're looking at Euro USD, you can see that it kind of just creates a standard deviation, like forward projection of price. It's not, of course, like a guarantee that price is going to do this. It's just a best guess based on recent price direction. So it sees kind of like a modest move lower right now. I don't use it that heavily to try and like make a decision about what the market's going to do, but it's a cool tool and we had fun building it, and some people use it. So that's the thing about the EdgeFinder. There's so many tools in here. I don't use all of them. I use a lot of them, but I don't use every single piece of information for every decision. The price forecast, I think, is a pretty cool tool. It's not like a make or break feature. Like if we look at the S&P, you can see there, I love that. Like it just kind of creates a general trend projection. It's a cool tool, not gonna lie. But I don't use it to make a trading decision. What I use for trading decisions off the EdgeFinder is straight up the top setups page, which takes a look at technical sentiment and economic data. And then what I do with that is I then go look for technical setups that kind of agree with this, and I like the prospect of. So like I'm watching Bitcoin for pullbacks. I'm watching SPX for pullbacks, NASDAQ for pullbacks, Dow Jones for pullbacks, Russell for pullbacks. Copper, we can look at copper, but I don't know. I don't love the chart on copper. Let's just pull it up though. Copper. Yeah, I marked this chart up. Like if you get a big break to the upside here on copper, possibly like Chinese stimulus news or something, like if the Chinese central bank's going to do more or something like that, and it gets this chart looking a little cleaner, then yeah, I'm interested. What's the reading on USD JPY? It's neutral, but slightly, it's very close to getting a bearish rating. So dollar yen is looking pretty promising. But again, as I just mentioned, with dollar yen, keep an eye on this section right here. That's the jobs data component. So tomorrow, if you get jobs data coming in weak, dollar yen very much would look like a stronger, like bearish reading. So I'm interested in dollar yen. That confirmation could be coming true tomorrow. If NFP is a disappointment, it would likely cause this chart to really start to take out some lows and look like a decent sell opportunity in my view. So I'm watching dollar yen. By the way, guys, if you don't already have a copy of the EdgeFinder, here's your sort of semi-last call. We're doing our Cyber Monday sale, which is ending this week. If you have not already picked up a copy and you would like to use the fundamental data that I use every single day to help find the trades that I take, here's the best way to do it. We're going to drop a link here in the chat right now if you want to speak directly to a member of our support team who can set you up with that discount. Or if you just want to punch in a promo code, write this down. It is YTVIP. That will get you the cyber discount, Cyber Monday discount week. YTVIP will get you 40% off. Or if you send us a message right now, we'll get you an extra discount and answer any questions you might have about the tool so you can speak to someone on my support staff for help if that is something of interest. So again, click the link. It's in the chat right now. If you're watching this back at a later point, if you're watching the recording, there will be a link in the description for you to get access to everything. So you can pick up some tools here for our Cyber Monday discount. It is our biggest discount of the entire year, so don't miss it. Okay, guys, we're going to take a quick break, and then up next, we got Marco and Miko joining me here for Technical Thursdays. Stay tuned. All right, we're back with Miko and Marco. What's up, guys? Welcome back to the show.
Hello.
Good to have you guys back. And I guess kind of a fateful day for us today, since we've watched Bitcoin together for a long time do nothing. And suddenly, here we are. Bitcoin has made it to the promised land, it seems, 103,000. My goodness, what a crazy run up it has been. I didn't think we'd see it so soon, but 100K has arrived, it seems like, for the crypto crowd, and seems like the breakout was super strong here. I want to start with Bitcoin just because, of course, this is something that we've talked about as a trio for a long time. Maybe we'll start with Marco on this one. Marco, what is your reaction here to Bitcoin hitting that 100K mark?
Yeah, so I would say very exciting. I did have a prediction that we will hit 100K. And I think a lot of people thought that we will hit this level and then immediately reject. But actually, the rejection happened a bit earlier. So they thought this was going to happen. I think we kind of had that happen around the 99.87 mark. And then we had a big retrace down. Not a big one, but kind of a significant retrace as people started selling into the 100K mark. I know my friend Nico had a fairly significant position and he started selling off right around these levels. So he didn't want to wait for the 100K mark. And I think this has more upside potential, to be honest with you, especially on the daily chart, which looks really healthy. We had this just one bearish candle. So the momentum is still to the upside and the sellers are nowhere to be found currently. If we had a situation where this candle printed and then the next one continued down, that would be pretty bearish. But as it stands right now, I'm pretty bullish on Bitcoin. I think Ethereum looks even better. Let me check on that. Yeah, Ethereum looks very healthy as well. breaking out of this flat range, approaching this major high, but nowhere near the all-time highs yet. So we still have a long way to go on Ethereum. What is good is usually Bitcoin has the first reaction, and then it takes a while for the altcoins to follow. So Ethereum may have an even bigger risk to reward. I know you talk about this with gold and silver. Usually silver has a better move, a better risk to reward. I think it's the same case with Bitcoin and Ethereum.
Yeah, and I think it's interesting too. One thing that's actually surprised me has been Bitcoin's like dominance. Usually by now, I actually would have guessed that more of the altcoins would be kind of exploding and that Ethereum would be taking out the highs and rushing past them. And I find it kind of interesting that Ethereum has not done even more. I mean, it's doing still exceptionally well, but I just wonder why that Bitcoin still has held the leadership so well. I get that it's kind of the dominant player, but usually, like you just mentioned with gold and silver, if gold starts having a really good run, silver will actually catch up and overtake, which I guess still theoretically could happen if you do see crypto continue. But let's ask the same question to Miko. Miko, what's your thoughts on Bitcoin, Ethereum, crypto in general, hitting these ginormous price tags?
Yeah, it's an amazing event, but I'm just expecting higher prices at this moment in time because the key thing with me is momentum with these crypto markets, and we were looking a little bit tired with Bitcoin on the way up to 100K compared to the previous bullish legs. We had a lot of momentum, big candles there. Now it came a little bit more tired. So it was a sign that price was starting to stall. We had a bit of retracement, but now we've broken 100K with force and some big candlesticks here on the 4-hour chart. If this can continue, then who knows how far we can move. But naturally, everything still looks bullish. Still seeing consistent higher highs and higher lows. I think Ethereum looks pretty good as well, which Marco referred to, because this one's nowhere near the all-time highs. We're still looking at, where's the all-time highs? There we are. Still looking at just below 5K for the all-time highs as well. So this one still has a reason to keep going because we're not quite at the all-time highs yet. So I like what Ethereum's doing. And recently we also broke through a channel, which also reminds me of Bitcoin as well, because we had that descending channel, which price was in for a while. We broke through that, and that started off the big move in the all-time highs for Bitcoin. And we've just gone and done a similar situation here with Ethereum, strong break of that descending channel. I wonder, is it time for us to go and hit the all-time highs? Possibly. How things are looking, I wouldn't be surprised. So yeah, it's a very bullish climate at the moment for crypto. The key thing is momentum is still there. So as long as that persists and we don't see kind of a crazy sell-off at some stage, I think it's onwards and upwards.
Yeah, what I thought was interesting yesterday was we already sort of drew the conclusion or the comparison to gold, silver, and that sort of thing. Yesterday, during Powell's, he had a bit of a speech yesterday. During his conversation, the interviewer asked him, do you see Bitcoin as a competitor to the dollar? And he actually pointed out that he thinks that Bitcoin is not necessarily a competitor to the dollar, but that it is more of a competitor to gold, which I thought was interesting. I don't know how much of that is just sort of staying true to the dollar strength and just kind of touting that it's not a competitor to the dollar, it's not even close. It can compete with gold, but it can't compete with the dollar, kind of thing. Not sure, but I was just curious in terms of gold and silver right now, what you guys' thoughts were on this, whether it be price action wise. I mean, it seems very, very indecisive right now, but I just thought it was interesting. You've got Bitcoin and Ethereum moving with so much momentum, and here is gold and silver, and they can't seem to do much of anything right now. So Marco, I guess gold, silver, thoughts on these ones?
Yeah.
I don't know, reaction to that Powell thought, anything?
Yeah. Look, I like Powell. I think he's a great guy, but he may be a bit too old. I do think Bitcoin is a risk on asset and not a risk off asset, and gold is a risk off asset. So as you said, Bitcoin flies with the Nasdaq. So basically, I would say when the economy is good, when everything is doing good, then Bitcoin is gonna go up, and gold may be stagnating But when there's a crisis and people are afraid, then usually money flows into gold. That is just how the markets works. We will see what will happen in the future, but currently that is kind of the methodology. So if we get into a crisis, I don't think Bitcoin is going to perform as well, you could say. But
That's a
gold
good
right
point.
now, for gold, it's looking stagnant. We are printing a V reversal pattern on the daily chart, which is a bullish pattern. But again, then we had a big rejection of this level, a big red candle. Now just being super flat. So yeah, not that interesting, to be honest. I think we have many more interesting instruments today rather than gold. But it is interesting what Mr. Powell said. That is definitely a good thing to talk about.
Yeah. Yeah. Same question, Miko. Are you watching gold, silver at all?
Yeah, so I'm keeping a close eye on silver. Not a big fan of gold. Can't get a good read of it. It's a bit sideways at the moment. But silver, I think, looks almost clear as day in terms of the higher time frame and what we're doing there. And this is the daily chart. And what I see is still a pretty much a maybe not the cleanest of trends, but still a nice bullish trend. Price still respecting higher highs and higher lows, and that's the most important thing for me. And again, with gold soaring to the upside, or has been soaring to the upside, I do think silver is kind of lagging behind. So if I quickly span to the weekly chart, all-time highs with silver up here. It's a similar situation to Ethereum with Bitcoin. Bitcoin's at all-time highs. Ethereum not quite there yet. Could be on its way. Silver could be on its way as well. So in terms of the risk to reward opportunity, is looking very, very good. So if I drop back to the daily chart, we're still seeing confident swings. This is our swing low to that swing high. I'm looking at this as a pullback of that move for price to now continue. Looks like we're stuck at this 0.618, seeing some nice double bottoms at that area. Has been a nice area of resistance previously as well. So in terms of the opportunity, kind of waiting for price to clear resistance here, and hopefully I can find some opportunities on the back of that with some pullbacks, and looking for my confirmations to ride that up. But yeah, I'm very bullish on both gold and silver, generally speaking. But gold, the price action, I'm not really getting a good read of that just at the moment. So I'm waiting for that to just give me more information. But silver looks good, so hopefully we can get some nice breakouts and pullbacks.
Yeah. Yeah, fair enough. No, I've been a little frustrated watching gold. I feel like it's just been watching paint dry recently. However, Miko, I want to also ask you about follow up on the yen pairs here. They've been really interesting recently. You've had things like I was looking at pound yen, euro yen, big slide here, move to the downside. Dollar yen move lower. A little bit of an uptick here in the last few days. Do you think this is just a pullback? Are you still bearish on the yen pairs?
Yeah, I'm still pretty bearish on the yen pairs. I've still got a short position on CAD yen, which I'm still nursing at this moment in time. It's
Oh,
been
very
pretty
nice.
well. I'm hoping we can get some more pullbacks to short, because that's my bias. I'm going to keep attacking that bias until proven otherwise. And hopefully I can get some bigger pullbacks. Looks like the yen pairs are seeing a bit of strength today anyway. So I've still got my eyes peeled on 109.5. I'm looking for those bigger pullbacks before I do short. My stop loss for this one is still trailed just above the level here. So I'm kind of giving myself maximum room here and being very loose with the stop loss. And I really like the weekly candle close as well. A lot of force in that candle. So my expectation is more downside. Of course, we'll see how things develop. And of course, if new information comes, I'll readjust. But so far, on the higher time frames, more so, it looks really bearish for a lot of them. Pound yen as well. Really big moves to the downside.
Sorry, how are the swaps?
What was that?
How are the swaps for the trade that you're in?
Not particularly good.
Not good.
But yeah, not particularly good. I mean, at the end of the day, it's difficult because you can't avoid them. If you're going to short the yen pairs and swing them, you're gonna experience it. So it's just something I just kind of roll with the punches with. Yeah, it's not great.
So they're
but
negative.
Yeah, negative,
Okay,
100% negative. But yeah, it's just the price to pay if you short the yen pairs. Really, you can avoid it by not shorting them, but in this point in time, they're negative and not particularly great. But I like the price action. The opportunity looks good, and I'm looking for more downside.
Yeah, I like shorting the yen pairs. I've made some good percentage on that. But the swaps kill you. So
Yeah, of course. They move pretty fast, which is the benefit. But
yeah, they
swaps
move
not
really fast. They're great.
Yeah.
Yeah, if you catch, I mean, look at just what you're looking at right there on the dollar yen. I mean, look left and you see those ginormous drops when they happen. Can be really rewarding. So that's the thing is sometimes you have to consider the cost of the trade, similar to for options buyers, like people who buy calls or buy a put on something. It's similar, like how with currency carry, like you get charged some debit per day for holding the trade. With options, you also pay to hold the trade, but if you buy a call and the market goes crazy higher, you make way more than just buying shares. In Forex, it's like if you catch a good yen short move, it's very rewarding, even considering the swap. So I find it difficult to trade, yen pairs short, but there are certain times, there's certain windows where you get risk off moves that are incredibly rewarding. I mean, look at the if you had taken this trade with any sort of stop loss on it, the risk to reward was probably exceptional. So, there's for also, this is just a side note. FXY, for those of you guys who can trade ETFs, maybe you're in the US or in a country where you can trade ETFs, I know of one way that you can actually kind of avoid swaps, and it is kind of a life hack if you trade with an ETF broker. I trade with an ETF broker. Is part of the reason I love it, is trading costs are much better. You can actually buy FXY, which is a symbol that tracks Japanese yen, and there is a cost to holding this, but it is much better. The expense ratio is 0.4% per year. So if you wanted to buy Japanese yen, I know this because Chris Pulver, who comes on the show pretty frequently, he had a very bullish bias on the yen, actually at like the perfect time. He was picking up yen longs. He was stacking or dollar cost averaging. And then when the yen went crazy, he didn't have to pay a tremendous amount in swaps, but he was still able to get yen exposure for low cost. So there are many ways to get creative on positioning outside of simply just trading, currency pairs or, futures contracts. There's so many options out there. You just have to kind of get familiar. It does mean jumping to different places, but, or the alternative is just trade the high. The downside to this is there's gaps in this chart. It's not as liquid. It's not as quick. You have to go by stock market hours, but there's pros and cons to everything. We've talked about that many times on the show. So I guess next question for you guys is the dollar. Dollar has been actually coming down here this morning. Unemployment claims came in a little bit weaker than expected. Dollars continuing lower off of that. What are you guys' thoughts on the dollar in general, or USD currency pairs that you might be watching? Marco, if you want to go first, what are you looking at?
So for me on the dollar, all three of my currency pairs are pretty flat and range bound. If I take a look at the DXY on the daily chart, we are slowing down a little bit. We had this really nice bullish market. The dollar was gaining a lot of strength, but now we had a signature which I don't like, and that is two large bearish candles, one after the other. So this could be a sign of either a flat range or a weakness in the dollar. One thing I don't really expect is for us to continue with that really strong bullish pressure. I do think a bit of a pause or a bit of a correction could follow right now. For my dollar pairs on the 1 hour chart, yeah, they're looking pretty flat. I think we're waiting for NFP. Usually before NFP, the week before NFP, you're going to get this sort of flatter price action, a bit range bound movement. And then once the news is in, then you get the actual direction, you get the trend. So this is normal, and I'm waiting for Friday on the dollar pairs to see some more movement and for a breakout out of this range, let's say on the euro and US dollar, these highs and these lows right here as well.
Yeah, no, I think what you pointed out about kind of consolidation ahead of NFP is a fair fair assessment. Though that being said, the dollar has at least come off of its highs around that 108 level. So we'll have to see. Miko, what are your thoughts? Dollar index or currency crosses that you're watching with the dollar? Whatever you'd like to look at.
So yeah, I'm pretty bearish at the moment with USD. We came back into that 107 area and really struggled to break through. And last week we closed pretty bearish as well with that candle. So I am expecting some downside. And it does look like on a 4-hour perspective, we are starting to see some lower highs forming and some lower lows as well. So I do think the next maybe few days, of course, we'll see what happens with NFP, but at least in terms of the technicals anyway, there's a good chance for us to see some follow through to the downside. So I am looking at a weak USD. And there's a few markets I'm looking to trade. Euro USD is one of them. I've been waiting for price to break the highs first before I do look for any pullbacks. So that's still the move I'm after. And hopefully that could follow up maybe sometime next week. Pound USD, similar situation as well. This one I'm kind of looking to see if we can come back and retest the low for a big double bottom. Or if price is going to be very bullish, I may look for some pullbacks afterwards as well. A similar setup to Euro, but it's the same idea. Looking for a higher high, higher low than the trade, or if not, the double bottom down there below. And I also really like dollar CAD as well for some shorts because we're trading at a really big area of resistance in the weekly chart. So if this is going to sell off, it could be a very big move. Looks like price has broken through it, but looking at the low time frames, it looks less. I'm less confident with the breakout, and I'm not quite sold on that yet. So if dollar CAD can have a strong move back down, there could be some really nice shorts to come from that opportunity. And of course, if I do have that bearish bias on USD, there might be a long way to go for this one. So I'm keeping an eye on a lot of these USD pairs. Not quite sat for me yet, but I am looking at opportunities favoring USD weakness.
Yeah, no, awesome stuff. I kind of think that the dollar index is hinging on NFP big time. I mean, if you get NFP comes out real weak, that 108 sell-off could turn into more of a less of just like arguably a bit of a pullback here recently to more of a sustained, couple week more sell. I wouldn't be surprised if that does happen. If you get a weak NFP. So I think specifically for the dollar index, you've got this like 105.8 level where we're currently trading. So if I'm looking at this here, right around here, if you start breaking that level, that no longer looks like a clean uptrend chart, at least for me. So we'll see, but kind of depends what the NFP number comes out. If you get a big miss, likely the dollar will go lower, and continuation plays, pullbacks would be something that I think actually might start to look interesting. So we'll have to see where that takes us next. Miko, Marco, thank you guys.
What if we get the number 12? What happens then?
If we get the number 12 again, then I'm gonna scream. That happened last time, and I thought it was so funny. For those of you guys who aren't familiar with what Marco just pointed out, last time around for NFP, we got 12,000, and I named a video 12 because I thought it was so funny. I was like, I just put the name out 12 with a bunch of question marks because 12,000 jobs added last time around, where the forecast was 106,000. So, if we get sort of a repeat big miss in jobs, this time around, I don't think it will be so funny. I think this time around, if you get a miss like that, the market will like really sell off. But the reason that sort of happened that way, a lot of people pointed to the hurricane that happened, which put a lot of hiring pauses out there. I think that was part of the reason. But we did see unemployment rate also at the same time stay relatively healthy, relatively flat. So we didn't see a big, if you had seen last time around a big spike up in unemployment rate with the less hiring that went on, that would have really spooked the markets. What has the potential to spook the markets this week, however, is if you get really weak jobs prints and unemployment rate rises, those, if you get both of them pointing the same direction, it usually causes a very strong move. So on the other side, if they're both really strong, it will create dollar bullishness. So we'll see. It'll be a really big report on Friday, especially ahead of a Fed meeting this month, which is a very important Fed meeting. it's gonna be volatile week. I think I would just say this from a fundamentalist perspective. If you get a large beat or miss, this is going to be a very large NFP move. Because again, I'll tell you why. Long story short, even if you're not a fundamentalist, if you want to just keep your fundamentals very high level, there's still a chance right now that they don't cut rates in December. So there's a expectation that they're going to cut rates, but there's not a certainty. Usually when this number is like really high, like let's say this was like a 95% chance, then NFP is still important, but we already have enough information to say, yeah, we're going to cut rates. But if we only have a 30% chance, there's still the chance that NFP comes in, NFP is really strong, and they say, oh, we don't need to cut rates. And this number jumps. And that expectation shift would be very drastic for market moves. You'd get ginormous moves. So I think NFP this week is a bit of a loaded spring and has the potential to move quite a bit if you get a surprising figure. So I know that's always the case, but it's especially the case when you have the spring wound right here with expectations for rates this week, this month. So we'll see. It's going to be a really big week. NFP, I think you pointed out earlier, Marco, the consolidation. I think it's very much like poised for a move, strongly one or the other. So we'll see.
It's going to be fun.
Yeah, always a little bit fun with the NFP jumps. Guys, thank you very much for joining me on the call here or on the show. We've dropped the link here in the description. I'm sorry, in the chat right now. We've got Marco's YouTube channel as well as Miko's YouTube channel as well. If you guys could take a second, make sure to go subscribe to their content. They put out wonderful free stuff to learn. They also offer services. They do different things. They have social media. Go find them on their site. Go find them on their pages on socials, Twitter, Instagram, YouTube, all those good places, and show them some love. So thank you both for coming on the show, and we will see you next week.
Thank you.
All right. Take care.
Goodbye.
All right. See you guys. All right. And let's keep going here. We've got just a second. We'll bring in our next show host. We're going to bring in Forex James. Just wanted to point out also, so for those of you who are just tuning in to the call or the stream today, unemployment claims came in 224K compared to 215. So slightly higher than expected unemployment claims, which would be considered a slightly negative thing, which is maybe why the dollar index was a little bit lower this morning. Not a huge move, right? You're not seeing a ginormous move on the dollar, but a bit of a move, right? So you're seeing some downside swing on the unemployment claims coming in lower. I do think that, we just mentioned the 70% chance of a rate cut in December. I think there's a good chance we do see that rate cut. But NFP really will either nail in the coffin for a rate cut or really throw a challenge into that. If you get a strong NFP report, expectations for rate cuts this month could really seriously change. So I don't know. December is going to be an interesting end of the year month for sure this year. So we'll see. We will definitely see. Anyways, if you guys want access to the software tools that we use on our streams, videos, and in our trading every single day, the EdgeFinder is currently mega discounted, and it is the last chance of the year to get 45% off. If you want 45% off the EdgeFinder, it's a one-time price to get access. The EdgeFinder is discounted for Cyber Monday. We extended the sale through the end of the week for those who needed some time to get access, but don't miss the chance. If you are somebody looking for tools, if you're looking for software, you'll kick yourself later because the price is going back to normal after this sale event. The price, like I said, is almost half off right now. So don't miss it. Send us a direct message if you're interested in getting access before that sale ends. You can pick up a copy for that discount. Okay, guys, we're going to take a quick break here, and then Forex James taking over the show for a little bit. So stay tuned. We'll be right back with James just after this.
Hello, ladies and gentlemen. How's everyone doing? Yeah, end of the week now, almost. Christmas is coming quite quickly. So NFP, sorry, not NFP, unemployment came out slightly higher than I would have liked. I'm still short on euro dollar. I'll show you those positions actually, because this is the ugly side of DCA. So I've been showing you how well it's been going over the past, I'd say 2 months or so. And at the minute, you can see I'm in quite a bit of drawdown here. And this, it's natural for DCA. It's just the way it works. You actually really ideally want drawdown, so then you can add into more positions and then look for that lower drop after you've sort of built up your threshold. So it's fine. But obviously, if you're someone that doesn't quite understand how it works and you over risk, then it's, step one to blowing your account. So yeah, not in an ideal spot really right now. I'd quite like to see the sort of the drop come now on euro dollar. I'm ready to take profits. I'm ready to start relaxing for the end of the year and for the new year, going to the new year with a flat portfolio. Having said that, we do have a report here from ING. They are also expecting the euro to continue bearish. I'm not going to read all of this, but feel free to print screen it if you want to read all of it. But I'll read this first headline here. Having fallen nearly 8% between late September and mid-November, it is no surprise to see Euro USD undergoing some consolidation, but we view this as bearish consolidation rather than base building. Be it European political risk, weak activity, the threat of trade wars, or energy prices creeping higher, EU gas inventories are starting to come under pressure. There are many reasons to be underweight in the euro. So it's not really a case of I'm concerned about euro dollar. It's more a case of how far are we going to go up before we see continued downside movements. So that's basically the rundown in euro dollar at the moment. James, DXY up, finishing ABC on the 4th, and then wave 3 up. Book it. Ball out. I will take your word for it. We trade very different strategies. I don't even know how to use the waves and all that sort of stuff. But I also have the same idea of the dollar can creep higher. I agree with you on that one. Our reasonings may be different, but obviously the goal is the same. So S&P still in this one. Tempted to actually just close out because it's currently I'm going to say should, but I used a pretty low position size on this one, so it should in theory be at 0.69% profit. It's actually about 0.1, 0.2, which it's not really worth the margin that it's taken up in my opinion, really. So I'm maybe closing that one and looking for a re-entry at a better price and a higher lot size, which would be good. Still in EuroCAD, again, this one has been probably the worst trade of the year, not in terms of loss, but just in terms of it being ugly, sideways, drawdown, nothing happening. It's just, again, eating up margin and hiring my drawdown. Pound CAD, similar thing here. We also took a short, and this one is doing exactly the same thing, really. Luckily, not as much of a prolonged drawdown, but of course it's still in drawdown doing nothing. Euro yen, I'm also still short on euro yen. Again, currently in drawdown, not having a great time in the portfolio at the minute. It's very red, but it's of course managed, so it's not a problem. James, are you still looking short pound CAD? I'm already in pound CAD shorts. I feel more bullish with AUD USD, but we'll wait for tomorrow's news to confirm. Yes, NFP is going to be big tomorrow. What's your thoughts on dollar? The dollar at the moment, feel that the dollar will be bearish in short term? Possibly. So actually, let me just pull up that report again, because there's something regarding the dollar that I'll show you. Let me just find it. Here we go. There's plenty of reasons to suspect the DXY dollar index will find good buying interest under 106. So the dollar still has a lot of supportive factors, although we've seen slightly lighter news come out this week. And obviously there is still a high probability that we're going to get a rate cut later this month. It's almost priced in. So the 25 basis point cut isn't 100% there in terms of the pricing, but it's expected on the most part. So I wouldn't expect, if we do get that rate cut, I wouldn't expect that to be a huge catalyst for the dollar to suddenly start dropping. If anything, we might see a drop into that rate cut and then sort of consolidation before a possible move higher. But yeah, on sorry, as far as I'm concerned, 107 and 110 are still my targets until further notice. Again, there isn't really anything that concerns me about the dollar. And as far as I'm aware, the investor sentiment around the dollar is still bullish as well. James, thoughts on indices? Man, agreeing too much lately. Well, good stuff. AUD, USD. Let's have a look. I'm still bearish on basically all the dollar pairs, really. So Australian dollar, pound dollar, euro dollar. But again, we are seeing slightly less buying interest on the dollar over the past couple of days, which is, of course, driving it to the downside slightly. But as I just said, I do still think the dollar has some room to continue up. So really, I'd be looking for Australian dollar to also continue its decline, but it's a little bit more resilient than pound dollar and euro dollar. So I wouldn't expect huge moves. I guess if I was going to trade this, I'd need to see the break of the support and then the retest and a continuation down into this previous low at around 0.62. But yeah, it's not something that I'm looking to trade, to be honest. Like I said, Australian dollar is a bit too resilient. Bitcoin FOMO is real. Took me out at 91K, then boom. Yeah, I have quite a bit of FOMO around Bitcoin. Actually, I'm not in Bitcoin at all. I'm not invested. Didn't trade it, so I'm sat watching, just watching it really. Although I've not really heard of anyone really talking about Bitcoin at the minute. I mean, obviously there's the traders and things that are, oh, Bitcoin's hit 100K, but normally when Bitcoin hits milestones, it's a bit more of a big deal. It seems like 100K hasn't really made much of an effect. So from here, I mean, you've got two situations. Either we see a large profit-taking dip, or obviously we continue up. Now, that makes me sound like a very typical guru. Price moves up or price moves down. That's two situations. But hopefully you know what I mean. Either, we'll have to pay attention to either case. But either way, I'm not looking to trade it. Don't really care about crypto. It's not my bag of tricks. So let's have a quick look here. So tomorrow is quite a big day. We've got hourly earnings and we've got NFP and we've got unemployment rate. So yeah, big day for the dollar. It'll be interesting to see. I'm sure Nick's already told you, but obviously the data we get tomorrow will be highly influential on what the Fed decides to do in terms of rate cuts. I would like to say they're going to hold rates, but at this point, it doesn't seem very likely. I predicted the past two quite well, and I've been saying that they're going to hold rates in December. But yeah, this is maybe where my my win streak comes in terms of predicting what the Fed's going to do. Yeah, let's see what's going on here. Eurodollar is actually not looking too bad. It seems like we're having a little bit of a mean reversion at the moment. Obviously, Eurodollar broke out of our 200 Bollinger Bands on the daily, slightly broke out, not managed to sustain much of a downside move, and now starting to creep up a little bit. Got the same situation here on dollar CAD. The USD NOK, I actually closed my sell position here just to sort of wait. I wasn't too interested in it. And euro pound is also having a slight pullback as well, obviously very, very small. But yeah, it seems like we're in a bit of a mean reversion at the moment, but that's cool. Hi, James. What's your thoughts on US 30 for a couple of days? Annie, that's a good question, actually, because we are currently in the process of planning a trade on US 30. So we're looking to send a signal on this one. So if we look, the Dow has got a very bullish reading of +9, which actually I think is the highest reading the EdgeFinder goes. I don't think it goes up to 10. Might be a little bit wrong there. But either way, the data is very good. The only thing is retail is long, but not a huge deal. I don't really pay attention to what retail's doing too much. But the theory I've got is looking for this market gap to get closed. Now, market gaps are a little bit of a tricky one. Normally, they get filled quite quickly. However, they can take a bit more of a prolonged time, obviously depending on the market conditions. And in this situation, it's taking a bit longer than I would like. But either way, looking really for the break, which we've had. retest and a gap fill here, and then a continuation to the upside. It's a very simple trade, but like I said, the EdgeFinder supports it. The current US data supports it, obviously, hence why the EdgeFinder supports it as well. The trend is supportive, so yeah, great. Seasonality is really strong on the indices as well towards the end of the year, which we're currently seeing come into play quite nicely on the S&P. FTSE not so much. FTSE's kind of crap, really. Nasdaq, similar situation. Love to see a pullback here to retest our previous highs. Nikkei, not too interested in Nikkei, and the DAX is also on a huge run here. Actually, we are almost at the top of this trend line, which is interesting. Yeah, it's interesting that the DAX has run so well considering all the problems within the Eurozone at the moment. I know that the the DAX has been heavily driven by things like LVMH, which is the company that makes companies like owns companies like Louis Vuitton. I'm not sure who else, actually. I'm not a huge stock guy, but obviously the earnings from those companies did really help bolster the DAX, but overall still possibly has some downside in it. Now, don't quote me on that. I'm not going to short the DAX. It's not something I do, but it wouldn't surprise me if we do maybe see a slight pullback here off the top of this obviously ascending trend line, potentially sort of having a mean reversion here, and obviously a reaction off the Eurozone. So we'll see. What else is going on here? Not too much, actually. Seems like the markets are very volatile today, obviously off the US news. Euro AUDs having pullback, yen pairs are pulling back. Seems like the dollar pairs are also having a little bit of a pullback. So yeah, that's about it. If you got any questions, let me know. I'm on for an hour today, so you're blessed with my presence. Or not, depends on if you like me or not. So let's have a look, actually. I've not checked smart money positioning in a while. So the yen still quite bullish, still got a positive net change. Overall net positioning is bearish. However, we're seeing this sort of flip, which is good. Very supportive of the yen in my eyes. Gold also still very bullish in terms of sentiment, although we've seen a seen a decrease in short contracts and a decrease in long contracts, which isn't overwhelming either way. S&P actually is very bearish, interestingly. Had a negative 9% change. Weird. I wonder why. Euro is, if I can click on it here. So long contracts increase, but short contracts also increase. Negative net change, overall bearish net positioning. So that's also, excuse me, also supportive for Euro USD shorts, which is quite nice. Benjamin, gold. We can have a look at gold. Although I think gold's pretty dead, really. There's nothing going on. So from my super experienced analyst head, we are ranging. So there's nothing really to say about gold. There's nothing driving it either way. We've got, well, nothing really. There's no catalyst to drive me to buy gold. There's nothing that drives me to sell gold. It's more a case of what are we going to do? Oh, sorry, what's gold going to do when we break out? Is it going to break to the upside, retest, continue? Or are we going to get the opposite thing where we break to the downside, retest, and continue? Either way, I'll be looking, but generally speaking, there's nothing. There is nothing to say on this, unfortunately. PA on gold has been awful. It has actually. This is acting very much like a currency pair rather than a precious metal. But there you go. To be honest, if you're looking at it from an objective view, a stable gold price is actually quite good. But I'm just a bit concerned really with gold. If we have a look at the mean reversion setup here, it's actually not too, yeah, it's kind of middle ground here. However, it's had a huge run this year. So when were we at? Where's the start of the year? Around here. Oh, around here. So it peaked at a 43% gain. It's now 35. I'd love to say gold can continue up, but I'm just not confident. I just don't see, again, I don't see anything that's worth driving gold higher. Hi James, can you show us personally how you use the EdgeFinder Pro in developing trade ideas? JP is a video actually on my YouTube channel about how I use the EdgeFinder. But generally, I use it as a strong confluence. So I will go through my own research, I'll do my own things. And then if I come to an idea, for example, like long on the Dow Jones, I'll check the EdgeFinder and say, okay, is it on the EdgeFinder? If it's not, then I'll wait. And then if it doesn't come on the EdgeFinder in a later date, then fine. Again, I'll abandon the trade. It's kind of like my entry signal, really. In this case, I want to long the Dow. Dow is very bullish, so I'm looking to go and buy the Dow. Obviously, that's a very brief way of explaining it. Again, there's a video on my YouTube you can go and watch. Thoughts on NASDAQ? Sure. Oh. So NASDAQ's very similar to the other indices. I would expect a continuation really to the upside. I don't really see anything standing in the way, especially as we've got obviously really strong seasonality. And we are coming into another Fed rate cut, well, highly probable rate cut, which is obviously beneficial. So love to see a retest on this previous all-time high resistance, but whether we'll get that or not, I don't know. This market might just continue to rally without me. But either way, I would lean more towards buying rather than selling. What do you think about BXY for December month? I wouldn't really suggest anything on the pound. Really, it seems to be recovering a little bit from our downwards move. However, I think the recovery we're seeing really on the pound and the euro is mainly driven by dollar weakness rather than any supportive factors for those individual currencies. So for the pound, it's more a case of if we can see this sort of pullback top out and continue to the downside, I'd still look to short. However, if it continues up, I'm going to stay out of the market because I don't really have anything that makes me want to buy the pound. I'm actually a super bear on the pound, although I've not really gotten into any positions yet on that one. Eurodollar is continuing higher, which is frustrating to see. I'll be quite honest. Really don't like that. Euro CAD, again, not doing anything. Yeah, frustrating time. Okay, cool. What can you do? But yeah, if we can see the euro start to top out at some point here, I think euro Australian shorts would be nice. I would possibly scale more into euro yen. So euro yen positions are, in my opinion, still very, very good. So the reason I'm short euro yen is because, first of all, I'm very bearish on the euro. Sean, hello, it's good to see you here. So very bearish on the euro and the yen. We are heading into a rate hike by the Bank of Japan, which is obviously the complete opposite of the European central banks. So we've got the divergence there between central banks. There's also the possibility of an intervention, which is highly probable, but timing it is next to impossible. So it's not something I've taken a trade on solely, but it's one of those things. It's like, if that does happen, at least I'm in the trade, and also using the other factors I just mentioned. Although I'm slightly over leveraged in this one, so I may have to cut a position and wait and see what happens. Are you profitable? No. Yeah, of course I am. Let me just prove that to you. So this is my FX book. I'll refresh it so you know it's real. Currently in, you can see actually I'm in quite a bit of drawdown at the moment, but this is my history for the past couple of months. But I'm glad you asked that question. It's good to be aware of who you're listening to. I'm actually going to change this to candles. Let's see what's going on here. So 106 is, oh, actually we're below 106 now. So we've got this support level on the daily that's coming in here. So interesting to see. Let's go down to the H1. Let's see if we can reject this support. That would be lovely if we can. You're currently trading prop 2. I have a prop account. It's still phase 1, and it's because it is sat collecting dust. And it's because at the moment I'm heavily DCAing rather than in any swing position. So you might notice the reason I'm DCAing is because there's no, or well, recently it's been very difficult to find entries into markets I like. So I'm very bearish on euro dollar, but I can't find a swing setup that meets my strategy. So I've had to DCA. And on the prop account I'm not allowed to trade without a stop loss. So obviously I can't do that. So I've not been trading on it really. So I'll probably come back to it next year. What do you think about footprint analysis? I have no idea. Never traded it, never looked into it. It's not part of what I do at all. I would suggest, though, it probably could work, or it does work, but I don't know how to use it really. So I can't give you much insight there. What market do you trade? I trade everything. Anything that moves, anything that can pay me, and anything I understand, I will trade it. So mainly G10 currencies and the commodities, precious metals, oil, corn, wheat, those types of things. What market do you recommend to a new day trader starting out, specifically futures or Forex? That's a good question as well. I would suggest possibly euro dollar, and just because it's the most versatile market. So it's the most liquid currency market, and it's generally just a lot easier to try to understand. The economics are pretty surface level. So obviously, if you're trading something like the Mexican peso, the economics aren't as easily available. You won't get an alert on your phone, or you might not see it in a news feed. Whereas with euro dollar, all of the relevant news you need generally is very accessible and very easy to catch up on. And then from there, start moving into different markets, start adapting. Understand same. Trading on a personal is much different than a prop. Yeah, it is. Yeah, I don't really like prop trading. To be honest, I bought the prop account more as a little experiment to see if I could pass it. And yeah, I've just not had the opportunity to trade it yet, really. Are you subscribed to any paid news sites? Yes, the way you should view paying for services in trading is, does it pay for itself? So something like the EdgeFinder, if you buy the EdgeFinder, it might hurt a little bit when you see the money come out of your account, but then when you start making the profits, you start seeing a bit more clarity, and you know that eventually pays for itself, because obviously it gives you clarity in the markets and helps you make that profit. Same thing with Bloomberg, that I pay for Bloomberg. TradingView, any expenses you make should be ones that will pay for themselves. Obviously, I'm talking trading specific here. I'm not talking about your phone bill or anything. Okay, cool. So let me just see here. Really curious what's going to happen with the dollar here. Are we going to reject? Are we not going to reject? I have a feeling we will, but obviously feelings don't matter. Any advice to become profitable in day trading? OC, there's a lot of different strategies that work. I DCA, and I have one based on statistics as well. So it's really a case of just find what works for you, and also get a mentor. I think that's quite an overlooked thing, especially in retail. And when I say get a mentor, I don't mean someone off Twitter. I don't mean someone off Instagram. I mean a real mentor that has a MyFX book or has professional institutional background, someone that can really teach you something beyond just looking at candlesticks. Because candlesticks is trading 101. You need to look a bit beyond that. So that's my advice to you, is really connect with someone that knows what they're doing. Okay. Actually, I want to have a look at oil. a bit conflicted on oil, really. Let's see. It doesn't have an EdgeFinder reading, which kind of makes me a bit more neutral, really. It's just such a strong level of support. It's kind of hard to ignore this, really. See, I'd love to buy. I would be very happy if there was a reason to buy oil right now, but there just isn't. I think now is such a good entry point. But again, you know, there's no real reason for me to go and buy this market. Seems like the dollar's continuing its run down, which is fine. Similar thing here, actually, euro pound. It's been, for a long time, it's been really a no-brainer trade. It's been very simple. But the issue is the price action on euro pound is so ugly. There's nowhere for me to get in. I've not found a single opportunity in this whole move to the downside, which really annoyed me. Actually, I've been very bearish for a long time on this, and just haven't made a penny on it. I actually lost money on euro pound. I went short here, and I got taken out when the Bank of England announced rate cuts, which typical. But there you go. For understanding fundamentals, where do you recommend to start? I would, and this is going to sound biased, but I am 100% serious. I would start on Trader Nick's channel. So, for example, his Sunday videos and his live streams are a great place for understanding economics. So, for example, when you get a news release like today, it's not just, oh, we've got this number, move on. It's a case that he explains it and tries to help you understand it. I also do Sunday videos to explain fundamentals and things. So I'd say to learn the very basics, go to YouTube, and then to advance a little bit more, there's actually a website called, actually, let me just find it. Course Sidekick here. This is 100% free. And, you know, I always say this, but I've got no affiliation with them. But if you type in something like economics, this is like university grade stuff. And you can get all of this sort of information for free. Actually, I've got a link somewhere here. So this, so if you go to this link, it's Study Guides Alamo Economics, and you've got like a full breakdown on, you know, how to use economics, what they are, and all that sort of stuff. Although that's a little bit more advanced, so I'd say start on YouTube first. Hi James, what are your thoughts on pound dollar? Again, as I was saying, the pound seems quite resilient, so it's not a market I would look to short right now, although the setup seems very similar to what we saw in euro dollar all the way back here. We saw this ascending trend line, lots of retail buying, and then very swiftly that changed. Obviously, we got a huge bearish engulfing candle and a continued move to the downside. And I'm just a little bit cautious of whether that's going to be the same situation we have here on the pound dollar. Because as I said, I do remain bullish on the dollar. Overall, I'm always bearish on the pound. So I would love to get in a short position, possibly from here. Although I don't really have much research on the pound at the moment. But this would be sort of the first area I think I would look to go short, potentially, or the only area. What's your entry criteria like? Sparta's quite it's a question with a lot of answers because I've got a few different ways to trade. So for something like this, if I'm looking for a swing trade, it'll just be simple market levels, possibly a fib. In this situation, it kind of works here with the 61.8, so we could move our entry down slightly. So yeah, just pairing up the fib with a very simple level of structure. If it all lines up and the economics are fine, then I'll take the trade. For day trades like this, I'll look for pivot points, which are statistical levels. And then I also do DCAing, which is basically completely irrelevant of technical analysis. It's all based on the market momentum and the economic sentiment. But yeah, there is Not much else to go on about. US dollar and NOK is continuing downside movements. The dollar hasn't moved too much since reaching this level, really. But yeah, I would expect it to reject. Permabear, yes, absolutely right. I think the UK is absolutely doomed. I think it's doomed for failure. Worse than the euro, actually. But the thing is, the economics haven't caught up yet. So if you ever look at professional research on economics, you most of the time will see that the person that's written that specific section is from that country. So if someone's talking about the yen, it will often be written by someone from Japan. And the reason is because they have more insights. Like for me, I hate the UK and I think the pound is very overvalued, but the economics aren't quite there yet. So if I wasn't an analyst, which I'm not, by the way, I could then go out and start collecting data and build a real thesis, but I'm not going to do that. I'll wait for someone else to do it and I'll capitalize off their work. But yeah. Hello, friend. In terms of economic sentiment, what dates are you looking at for the pound? Oh, what datas? Everything. So this is why I like currencies. A lot of the data points are very similar. So unemployment, labor market in general, central bank policies, services, manufacturing, all sorts of stuff. It's all very the same though. So you can look at the same data points for the same currencies and then obviously work out which one's weaker, which one's stronger. Thank you for the previous response, James. Which is more better, taking partials or trailing stop loss to break even? Sparta, that's completely up to you. It depends on what your back test tells you and what your data tells you. For certain strategies, one works better. For different strategies, the other works better. There isn't a one size fits all really for rules like that. There is no real reason to bet on GP. Expect to bet against them at the moment. Well, not doomed, but it's not good. Yeah, exactly. Any chance recession in the UK due to lagging data? I don't have data to support that, but I would say yes, just based on the way things are here. Everything is so expensive. Wages aren't really helping at all. People can't find housing or can't afford housing. General food shops are very expensive. And I've noticed the increase. So it's like at the start when the cost of living crisis came to the UK and people were talking about it, I didn't really notice. And this isn't me trying to be what's that word, like entitled or whatever that word is. It's just I didn't really see it. But recently I kind of feel it in my wallet. It's a little bit hurtful really to go shopping these days. So yeah, it wouldn't surprise me if sort of the average person in the UK is struggling severely. Hey James, do you prefer dollar cost averaging in your trade entry? If yes, Annie, again, it depends on the situation. So euro dollar, the only reason I've DCA'd euro dollar for the past couple of months, past couple of weeks, is because I didn't have an entry. So again, the way I swing trade is fib, and I'll line this up. Does this fib level line up with structure? Which it does. This was my first entry. Price didn't get here, so I missed all of this move, and I missed this move as well. So I was like, you know what, I'm going to say I know, but obviously, you know, I didn't 100% know, but I my research suggested that this market was very bearish. So the only way for me to get in and not start missing moves and capitalize on what I was very, very sure of was to DCA. So essentially, it's just selling any pullbacks that we get. So I've been selling this whole move up. I was selling this move. I was selling up here, and then obviously I take profits when we start heading down. But yeah, there's no real entry criteria for my DCAs. Again, it's based on economics. So any pullback, I'll just sell regardless of what candlesticks are doing and things. I read good economic reports for Q4/Q1 for yen markets. Euro yen and New Zealand yen are targeted markets, citing uncertainty in Europe with France as catalyst and exports way down, New Zealand dollar bearish. Sean, 100% hitting the nail on the head there, mate. Love how you trade. You make analysis so easy. Just need to have your level of patience as well with setups. Well, patience comes with experience. Trust me, I wasn't always like this. There was a period where I lost my life savings on US 30. Everyone will get to where they want to get to if they put the work in and are patient. if you have money to go into the markets with, you wouldn't have been affected in the early days, but we all feel it now unless you're uber elite, Reese budget. Sean, yeah, exactly. I couldn't have said that better myself, actually. Yeah, it's very difficult here, which is one of the reasons I'm moving. What about pound Swiss? I'm really glad you guys are so talkative, by the way, because if I'd sit here for an hour and none of you spoke, I think we'd actually have about 45 minutes of just silence. So pound Swiss, I would like to say it's bearish. Risk off appetite for the Swiss is obviously beneficial. The Swiss is generally a very stable currency anyway. It's something I will generally always lean to go and buy, even if there's no real catalyst. So for example, if I am wanting to sell, but if I had some reason to go and short the pound right now and I couldn't find another currency, I would do it against the Swiss, because again, the Swiss is quite stable. It's a good old reliable, if that's the right way of saying it. Again, I don't have that much data towards the pound at the moment, but yeah, overall, generally speaking, I think shorting pound Swiss is probably the right move here. Let me actually just check. Let's see what the data says. See what COT is doing with the pound and the Swiss. So we've got, well, there you go. Pound is all the way down here with the S&P. Actually, the net positioning is bullish. However, the net change is very bearish. A 6% move to, 6% reduction. And the Swiss is quite neutral, really, here. Actually, quite bearish as well, net change. Yeah, again, quite stable. Nothing too alarming with the Swiss, but yeah, the pound looks quite bearish in terms of the COT data. What drills would you recommend for a beginner to do daily apart from jumping jacks? B-Pulls, you're asking the wrong guy. I've just started running again to lose some of this chub that I've got going on. But yeah, trust me, I'm in no position to be giving health advice right now. I used to be very, very fit, and then COVID came, my gym closed. And since then, it's just been a downward spiral. It's very difficult, actually, when you work from home and you live in the middle of nowhere. It's quite difficult, really, to get out and force yourself to be healthy. Is it just me or volume's way down? I'm guessing tomorrow's NFP is going to explode the market. Yeah, I think there's a couple of things now. Obviously, we are waiting for news. We're also waiting for Fed rate cut. Well, Fed, Bank of Japan, and all around a lot of rate decisions this month. And then obviously we're going into Christmas period, Christmas holidays. So we're going to get lower volatility then as well. So it's kind of just wrap up season really for the markets, which is one reason I'm looking to get out of all my positions ASAP. Trading started as a hobby, but UK politics taught me trading. Trading is one good way to beat inflation. Yep, exactly. Oh, regarding trading, no, I don't believe in all of that stuff. You don't need to meditate. You don't need your cold showers. You don't need to get up at 6 a.m. I think that's all absolutely ridiculous. You wouldn't do that to go to a 9 to 5. Why would you do it to trade? It's the same thing. You're just doing your job. Get to your desk, do your job, clock out. That's it. All this alpha male red pill nonsense is just wasting time. Obviously, go to the gym, have a cold shower if it helps. But generally speaking, obviously, meditation, reading 5 books a week, all that nonsense, it is just a waste of time in my view. You've got too much money to make. You don't have enough time to waste. I started training at home since COVID and haven't returned to the gym since. Yeah, I tried. I bought the weights and I've got a treadmill and stuff, and it's still, I love the competition, which I think is why I like trading so much actually. But the thing at the gym is like, I'd get on the treadmill. Can I outrun the guy next to me, or can I lift more than the guy next to me, or whatever it may? I mean, it's obviously really petty and it's stupid, but it was one of those things that really helped me out when I was going to the gym. I run 30 miles before I place a trade. Alan, that's pathetic. 30 miles. I run that in my sleep. Try at least 32 miles. Anyway, we're getting a bit distracted. Dollar is rejecting our support. Finally, maybe I can actually get out of euro dollar this week. Hopefully, if NFP comes out good or unemployment comes out good, I'll be out of this position. That's one position liquidated. Then we can move on to euro yen, which again, I really over leveraged on, which would love to get out of as soon as I can, which is showing rejection actually around our 200 H1 moving average, which is nice. RSI overbought. We have got EuroCAD. I hate looking at this chart. I hate it. Pound CAD as well. Hate it. I think I might just realize the loss on those two. It's really not worth my time holding those. S&P, I think, is actually the only one, and I think I said the opposite at the start of the stream, but I think I'm probably just going to hold this one because the stop's at break even anyway. So what's the harm? I'll just let it run. I took a 7-hour trade. I took 7R on trade, and I'm still in one right now. I hit my trailing stop on another one 1 hour, got stopped out. Scaling 1 hour, net bearish. Always getting again. Sean, good stuff. Alan, with broken knees, you just need to get a mobility scooter and then, you know, swing your legs while you're riding it, and you technically just run 30 miles. Hi, I'm Amateur here. Where do you think GBP USD? Osaf, I hope I didn't butcher your name. I'm sorry if I did. I would say pound dollar has got, and this is going to sound very basic, but it's either going to move down from the current price. And the reason I say that is because we're at 50% level. I love a 50% retracement. The dollar's just hit an H1 support. And this is a news move, so it's likely going to get corrected. So this is my idea here. We either see a sell-off here, or we come up slightly higher, hit the previous level, and sell off there. I wouldn't really say there's much of a bullish case really going into pound dollar. So yeah, they're the two sort of short ideas I've got really. What to do after taking position? M1, you should already know what to do after take. If you're taking positions on your own, you should have a strategy, you should have a plan, you should know that, to be honest. I'm sorry that sounds really blunt, but it's just the way it is. Hey James, when you have two currency pairs showing weakness, like in the case with GBCHF, would we just looked at now with COT showing weakness, is it still ideal to trade? No. So Dim, the core principle of trade, well, you've got two core principles of trading. You've got the first one, which is buy low, sell high. That's obviously number one priority. Then the second one is you need to trade a weak currency against a strong currency, or vice versa. Because if you've got two sideways moving markets or two sideways moving currencies, the market's just going to range. And unless you're a sell resistance buy support type of guy, you're going to get chopped up, or you're just not going to make money. So I would avoid markets where anything is neutral on both sides. It has to be strong versus weak, or weak versus strong. Took half my position off S&P so far, letting the rest run. Adam, well done. That wasn't sarcastic, by the way. I know probably sounded that way. How about Swiss yen? I still am bearish on Swiss yen because it's currently in a bearish trend. We've just hit this sort of support area. So obviously we're having sort of a natural pullback. We're also having dollar weakness, which is driving some of the yen strength or some of the counter currency strength. But I would expect this market to continue down overall or in the longer term. But right now it's kind of in a situation where I don't want to sell here, but I also wouldn't buy this market. Hi, James. Do you have a different stop trailing / profit taking strategy on FX? No, my strategy is around the board. So I have long-term strategy and short-term strategies, and that's it. But the management generally stays the same. Swiss yen was oversold. I'm retracing a bit. Expect downwards to resume at some point. Sean, 100%. Do you recommend me to keep my sell position on Swiss yen still and lose? Okay, first of all, I can't recommend you to do anything. No, I can't do financial advice. But if I was in your position, I would assess how big the loss is. If I can eat that loss and stay in the loss for another few days, potentially, then I would stay in the position and maybe even scale in. Again, this is what I would do, not what I'm telling you to do. Because again, I still view the yen as having a lot of bullish potential. So I would really be looking for a continuation down lower. But Again, in terms of a time frame, I can't really give you that, unfortunately. Yeah, not financial advice. Nothing I say is ever financial advice. So, yay, we're having a little bit of a rejection here, which is good to see. Euro dollar pulling back a bit. Yes, good stuff. Good stuff. Let's see, Euro yen. Also pulling back slightly. Cool. Can you check XAU? I can check gold for you, no problem. I don't think it's done anything though. Yeah, still stuck in a range. I guess, you know, if you're a short-term trader, I guess this is probably viewed as quite a big move, but in the grand scheme of things, we've really not done anything on gold. And again, as I said earlier, there is no real catalyst for gold, which is one reason it's just sideways. There is no escalations. There's you know, there isn't anything to drive gold either way, in my opinion. New Zealand yen at a good level. I suppose it is. I guess, yeah, we've got previous structure throughout here. Yeah, it's not too bad. I'm not going to take it, but I understand why someone would. Okay, cool. I'm just trying to think if there's anything specific we need to go over. I don't think there is really. Indices remain long, really, overall. Sorry, I should probably say US indices specifically. Gold is sideways moving. Oil doesn't really have anything going on. US dollar pulling back. Okay, seems like we're pretty standard at the moment. Haven't run my 30 miles, so can't do anything at the moment. Get those running shoes on. Put your running shoes on. Full port gold. Full port US dollar long. Come back after you run, and you'll enjoy the profits. I did that the other day. Obviously not full porting, but I put a position on, went for a run, came back, and it was about 3% gain. It was probably the best feeling I've ever had. Pre-NFP volumes are way down. They are indeed. There's, yeah, not much going on now post news, which is a bit of a shame. But what can you do? Unless there's any market movers in here. If you've got a couple of 100 million under management, could you buy the dollar? It would mean a lot to me. I'll send you a postcard. Even the Powell speech yesterday was kind of boring. There wasn't really anything going on there either. So it was, yeah, kind of a dead horse, really. Just checking the news terminal, so if there's anything interesting here. I don't think there is really. So we've got about 15 minutes, and then you've got Chris coming on to take over. So again, final questions or things, then let me know. By this point, most days, dollar yen is near 500k transactions on my broker, less than half today. It's all accumulation day. That's crazy, actually. I wonder why it's so low. I guess it's just waiting for news. SP500, if were though news tomorrow. I guess you're asking what's going to happen. I don't know, to be honest. Unfortunately, can't predict that because there is, let's see, there is 3 red folder news. And yeah, unfortunately, I can't predict all of them and give you an outcome for the S&P. Although, regardless really of whatever happens tomorrow, I would still remain bullish on the S&P. It is the last NFP of the year, actually. Good point. I've got to say, actually, I'm really looking forward to just getting off the charts and relaxing for a while. It's been a very hectic couple of months. Been on the charts basically every weekday for about 12 hours. It's been exhausting. It sounds a bit crazy to say that. Obviously, sat down, not really doing anything, but mentally, it's very draining. Back in the early days, I trade while driving. The worst experience ever. Alan, I could never do that. One stop loss, I'm driving that car off a bridge. Checks crystal ball. Yeah. Okay, cool. So let's see what else is on here. What can we take a look at? So we've got Dow, Nikkei, Nasdaq, bullish. We've got platinum. I don't trade platinum, so I'm not going to really go over that one. Copper. Well, that's good because I'm actually in a copper long. I'm not sure if I mentioned that earlier. This is my copper position at the moment, hanging around break even roughly. So that's nice. We've got Bitcoin bullish. Oh, that's nice as well. Just broke 100K. S&P already in that. Russell. Actually, let's check the Russell. The Russell might, if we've got a good price, it might not be a bad place to buy. Just had a market gap fill. Interesting. I wouldn't mind buying the Russell, really, especially as we're heading into the Christmas period and we've got a rate cut coming. Seasonality is bullish for the Russell as well. I'm going to keep this on the watch list. Let's do that. We'll see what happens with that one. The Roof Doctor. I think you're probably the 10th person to ask about gold, and there is nothing going on. I'm not even going to go on the chart again. I'm sorry, but it's just moving sideways. Sean, you have a good one too. So yeah, that's about it really. Yen, I remain bullish, although we're kind of pulling back. Dollar also remain bullish. Euro and pound remain bearish. S&P and the US indices overall, I would remain bullish as we're coming to the end of the year. Seasonality is overwhelmingly good. And obviously we've got rate cuts by the Fed. That's very, very likely. I actually haven't checked it today after the FOMC. Or after the Fed speech. Let me just see what it is. Actually, the chance of a hold has increased. So we were at 21.9. It's now 27.9. Yeah, it'll be really interesting to see what the news is tomorrow. I'm in Russell, large stop loss to let run into the new year. I don't know. It's probably the best idea, really. I think the price action isn't really very supportive in terms of there's not much to really trade from. See, I think if I was going to buy, the fib doesn't really work in this situation. Stop loss ideally would be around here, to be honest, and it's big. Actually, no, this is the H1 chart. It's not that big, really, is it? Is it? I guess it's relatively big. Yeah, I'd have to take a 2% risk on this one to make it worth taking, in my opinion. Yeah, not too bad. I will consider it. I'm not sure yet. Okay, cool. Good stuff. Let's see. New Zealand CAD. I don't know why that's on the watch list. Need to get rid of that. Not interested. Gold can also go from the watch list. Dollar NOK. I'm still interested in that, but not right now. New Zealand dollar. Oh, this is frustrating. I was looking at this on Sunday. I had it in my Sunday watch list video, and unfortunately, the market gapped right between my entry and hasn't come back since. But I'd still like to get short, so I'm going to leave that there. Euro dollar, obviously, I'm already short. You know that. So yeah, that's really it, to be honest. Alan, you get away with murder in your country. In the UK, a traffic or CCTV camera will catch you. Lee, that's funny you say that. Have you seen the guy? The guy in London is called Cycling Mike or something. I can't remember his name. But he's a guy in London that just goes around on a bike. And he's got a GoPro on his head. And he catches people on their phones driving. And he sends it to the police. It's crazy. People hate him. But it's actually quite funny. James, when you plan to liquidate all your positions, Liban, I would love to say now, but I'm not in a position to do that right now. So as soon as possible. So all I need is euro dollar to come down to 1.04. This is my hard take profit level, but at this rate, the way the markets are moving, I'll actually happily take profits around here, to be honest, just to get out and flatten the portfolio. Euro CAD, I think, and on pound CAD, I'm going to have to just realize the loss, which is fine. Euro yen, also, I'm going to start taking profits possibly around this previous low, if not the next low down here. I live in Chicago. You can for sure get away with murder. Oh, Chicago. I've heard bad stories about Chirac, although I'm not sure how true they are. Cool. Okay. So we are starting to pull back now, finally. I would expect now for euro dollar is a complete reversal. Well, when I say a complete reversal, I don't mean just a huge drop. I just mean a complete reversal of the move that we just had, driven by the US news. It seems like we've run out of momentum around this resistance level. The dollar's now hit support. So just from a technical aspect, this is a great place to suggest that we might start heading back down. And as I keep saying, the euro is in the bin. There's no real reason there should be buyers in this market. I should probably say there's no real reason there should be long-term buyers in this market. Chicago is beautiful. Only part of the city is extremely bad, but it's a 45-minute drive away. Interesting. I'd love to do a what's it called? A road trip around America. It's one of my dreams to do that. So maybe one day when I am a bit more free. Yes, I've seen him. He's angling for serious retribution. Should he tackle the wrong person? Yeah, I mean, he's caught really famous people. Don't believe the hype about Chicago. Interesting. Yeah, I'd love. America has got this. It's got like a. What's the word? It's got this appeal to me from like childhood. So I used to watch films. Obviously, most films are American, but everything always looks so cool in America. Like the huge shopping malls and huge gas stations and all sorts of stuff, and really nice, big food. It just seems really cool. I'd love to go around America. Never left the UK. Yeah, I was similar. I didn't really leave the UK until I became a bit more financially free, and it was probably the best decision I made. Really, traveling is a huge part of life experience. It really broadens your mind, and it really gives you perspective as well. It's like, travel to the other side of the world and hit stop loss. It's really doesn't matter. Who cares? It's just paper. Obviously, that's obviously not quite true, but you know what I mean. Huge diabetes, yeah, and huge medical bills. I'm not jealous about that. Road trip around America would be awesome. It would indeed. Anyway, again, we've got a little bit distracted. I have a habit of that. Look, I'm from the UK. Sadly, I am at the point where I'm a bit embarrassed to say I'm from the UK. But anyway, euro yen starting to come down. My drawdown slowly lowering. This has really hurt my Sharpe ratio. I watched an interesting video. This is the last thing I'm going to say about this, off topic slightly. I watched a video last night by a quantitative analyst about Sharpe ratio. I've never really paid too much attention to what my Sharpe is, but now I kind of want to. It's not really very relevant, especially for retail, but it's interesting. So your Sharpe essentially is the volatility of your portfolio. So let's say this is your equity curve, and let's say this is your balance. So obviously balance is going up, but your equity is doing this. This will give you a super low Sharpe ratio. Whereas if your balance is going up and your equity is also following very nicely, this increases Sharpe ratio essentially. And again, it's not relevant really for a retail trader. It's more of a case if you need a good Sharpe ratio, if you have investors and things, because you need to minimize the risk. But it's just a cool thing, I think. I click currency for every country and frame them. Alan, you know what? I had that idea, and unfortunately, I completely forgot to do it, and now I've missed quite a few places. So I might just have to buy some $1 bills off Amazon or off eBay or something. The contrast between the rich and poor in Los Angeles is total contrary to what I saw in movies. Yeah, definitely. Lived in the UK for 12 years, loved every bit, wouldn't go back now. Yeah, I can't wait to leave this hellhole. I'm saying it like it's that bad. It's not awful. It's not like a war zone or anything, but it's, you know, from what the UK used to be to what it is now, it's not. When I say used to be, I only mean like 10 years ago. It's just not, it's not the same. I hope you guys don't mind all this talking, but there is only so much going on in the markets that I can actually talk about, really. Yeah, Lee, it's not all bad. I make it sound like it's awful. It's not all bad. Obviously, you know, I'm coming from a place of privilege, really. Still a first world country, so it's just doom and gloom. Exactly. A brisket. I'd love to try proper American brisket and barbecue and things. Sounds amazing. Might have to come pay Trader Nick a visit, help him with his unpacking. Anyway, I think Chris should be here in maybe a minute or two. This is my segment is almost up. So, is there any final questions about the markets? Just burnt myself. If there's any final questions about the markets, let me know, and I'll happily discuss them until Chris arrives. But until then, there's nothing else going on. Let's actually have a final check. See how Eurodollar doing here. Well, at least one position's break even. Still not healthy, though. Not an average, I guess you should say. James River in Chicago. I have multiple guest suites in my building. We can connect on Discord. Yeah, Alan, that sounds good. I'll definitely get in contact somehow if I ever do come. I mean, I probably won't be in America for a while. I'm planning to move to Asia pretty soon. But anyway, Chris is here, guys, so it's my time up. So thank you all for joining. You've been great to talk to as always. I hope you all have a great weekend. I'm not sure if I'm on tomorrow. I'll have to check. But if I don't see you tomorrow, have a great weekend. I'll see you very soon. Thank you again. See you later.
'Twas the night before Christmas, and all through the house not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night. I'm not really sure how he did that. Pulver Alerts are now available at A1Trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver Alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver Alerts now.
What's happening, everybody? Happy Thursday. Nice to be back. We are looking at some rejections in the futures market. Here is S&P futures with a big old fake out candle on the 15-minute time frame. I'm looking to see if we actually have a 15-minute breakout above or below that 930 candle. And so far, neither one have really given us any actionable trades. I just grabbed a quick profit on SPX this morning. Price is pretty cooperative with a nice little chop. That's good. BAC looking up. We had some earnings today. I've got a trade. The trade on Dollar General's at 76.23. This trades out to next Friday for 79 by 78. This is a stock that I'm willing to own. Meaning if my 79 by 78, either I can take the loss for 48 cents or I could consider owning the shares and doing a quick repair. Now, to do that,
hey, Chris, I don't want to
I should show my screen, huh?
Yes, I wanted to make sure before you get too far.
No, man, we just got to use our imaginations this morning.
Yeah. All right.
All right, we're good. Thanks, Chandler. All right. Here was I was showing this. SPX is pretty cooperative this morning, which is fine. I'm looking at a SPY trade. If I've got a chart alarm at 6:05, I'm looking to see if my SPY gets to 6:05. I've actually got a butterfly spread that could be pretty profitable by tomorrow. Also on the Qs, if we get down to 5:20, I know we have non-farm payroll tomorrow morning with CAD employment. We didn't have a lot going on today with the calendars. Unemployment claims were a little bit higher. Powell's comments yesterday said something to the fact that the U.S. economy was pretty strong And, you know, the Fed rate decision stuff didn't really change much. The CME watch tool was pretty much the same as we saw the last couple of weeks, which is about a 70+% probability. I mean, I guess it's going down. This was 79% earlier in the week. Now it's 69%. Well, we're 2 weeks out from the Fed. And, you know, obviously I'm curious, like everyone else, like, is this going to be drifting down into the maybe high 50s, mid 50s? Is this going to be like a toss up trade? Will they, you know, will they cut? Probably. They probably will. But then that begs a question, you know, if they cut in December, what does 2025 look like? There are only anticipated to be about 2 more cuts coming through 2025. So we'd have one in December, possibly one in March, and then maybe one towards the end of the year, maybe one in March, one in May, and then a pause the rest of the year. But it's the Fed, so they can do whatever they want, you know. Plus this new administration coming in January, plus the debt ceiling is going to get revisited for the first time. I want to see if I took a screenshot of this yesterday. There's some crazy stat stuff. So we're at the 56th all-time high this morning on the SPY. S&P is currently on pace for a back-to-back year with a return above 25% if it holds, of course. 25% back-to-back years has only happened 3 other times in history in 90 years. 1935 to 1936, 1954 to 1955, 1997 to 1998. And let me see, what was the other thing I was talking about? Fudge. Hang on a second. I'm going to go to X. Also, we hit 100,000 plus on Bitcoin today. So that's cool. I don't think anyone's complaining there, right? So yeah, Bitcoin's doing fine. So we are sitting, I'll talk about Dollar General here in just a moment. Like I said, I issued this trade alert, Pulver Alerts 79 by 78 credit spread, collected 52 cents on the dollar. So scenario would be this. Okay. One is if price is less than, this is out to next Friday, so we still have a little bit of time in this trade. If price is less than 78 by expiration, we can lose 48 cents and move on. Or 2, this is what I'm considering. I'm considering keeping shares, which looks like this. Broker would assign me at 79. Okay. I would have to close my 78 long put for profit to lower the cost. So let's talk hypothetically here. Let's say that price drops to $70. So example would be if DG drops to $70, then I can have the assignment at 79. I can have my 52 cents credit on the original trade. And I could also have, let's say, an $8 credit on my long put. Okay. So that goes 79 minus 52 minus $8 is going to give me a break even of what? Should be $70.48. So 79 minus 52 minus 8. So I could see the stock price drop all the way down to $70 and I could own the stock at 70.48. Okay. So I'm able to kind of ride the stock price lower. So that'd be equal to 70.48 would be my break even. So what would I do? Well, I would add a, let's say, 14 to 30 day covered call for a break even or better. So rather than taking a loss on the trade, I would try to repair this stock and lower my cost basis. Now, if I went out 14 days or 30 days, let's see what that looks like on DG for an at the money covered call. Okay. So let's go to the trade on DG. If I went out, let's say 15 days, that would be December 20th expiration, give or take. If we're trading around an at the money, I could still get $2.50 to $3. Well, think about the math. If I did, let's say I get $2.50. Well, I lower my cost basis now to $67.98. and I have it covered at the money around $70 to $71. If I get it called away at $70, I turn what would be a 48-cent loss into a $2 credit. I'd still make $202 on the trade without having to take that $52 loss or that $48 loss. Does that make sense? So the reason I'm even considering that is looking at Dollar General on the weekly time frame. I mean, I don't know. I'm not saying that I love this stock, but I am saying that I'm kind of interested in a bit of a repair, considering we are at 70% off the highs, with gaps, with pockets, with inefficiencies, to see if this thing catches a bid. I think this is a pretty straightforward stock to repair. The last time DG was that low was back in 2017. But unfortunately, I don't know, where the big decline has come outside of inflation's been hurting the Dollar General store and Dollar Tree for that matter, and Five Below and all those like thrift stores. Also, the friction with U.S. and China, potentially tariff, same type of thing. It's like that could hurt Dollar General a little bit too. So anyway, food for thought. Would I repair the stock? I think I would. I would try, and maybe it takes me 14 days, maybe it takes me 30 days, but I think I could repair it. So rather than losing 58 cents, I could turn it into maybe a couple $100. Okay. All right. So just thoughts on that. What else do we have going on today? I'll keep an eye on the 605 level on the SPY. Keep an eye on the QQQ. Watching the overall indexes today. Everything is in red right now. Let's go down the list here. SPXY, this one's still okay. Let me go to the daily time frame. So I'm just going to use my little watch list going down. Dollar index. I'm just cautioning everybody to watch out for this range in case this is I look at this as a potential pattern on the dollar. I'm just not going to take the bait. I think this is going to be noisy. So if we look at the structure here, okay, let's say we have, I was looking at this as a potential topping pattern. Okay. Don't be surprised if price comes back up to the same high. If we're lucky, we have a range trade that ends up selling off. If I'm going to get bearish on the dollar, I would like to see this. This is a 4-hour time frame. If the dollar index gets below my 200 moving average, I would look for some opportunities to sell. But if it stays above this 200 moving average, don't be surprised if we chop around here or we work our way back up to the same highs that we had that kind of very quick fade back on that was like late November, right? I was actually in Florida at the time when I saw that thing bounce. That was a big like PMI flush out in the Eurozone. So anyway, if we're below the 200 moving average on the 4-hour time frame, I'm more inclined to be bearish on the dollar. Otherwise, I think we stay in a bit of a range where the dollar remains bid. Okay. For your question, I have something. I have like I don't know what they call them now. They call them like, VIP access or lifetime or all access or diamond hands or I don't know, whatever they call them. You can chat with the team on that. Okay, so that's DXY. Let's go daily time frame. So how does that translate into currency pairs that I'm interested in trading? I'm still looking to buy the Aussie dollar around 63. These are my levels down here: 63.10, 62.10, 20. Let's see. Let me check something. Give me 1 second here. Okay, so I still like the 63, 62, and 6,000 is kind of the bigger like flush down, but I would be happy to kind of scoop up some, some bargain shopping. That'd be a really nice, level from high to low. That's a 740 point move. If this is nothing more than a big range from this, 2022 swing from low to high, then we'll just see how this area trades. So Aussie dollar, I still like long. New Zealand dollar, I still like long. I understand that I'm not exactly precise on the bottom. This might flush a little bit lower. I got to be prepared for that. Meanwhile, dollar CAD, I still like long. We're at 40.37. I'll say this: if as long as my dollar CAD stays above 37.50, I'm going to remain long on dollar CAD up to 44.50 to 4,500. Okay, so if we pulled back to 4,000, that's fine. That'd be previous highs getting tested. We pull back to 39 or 38.50, that's fine. I look for price to give us a bounce. So if we pull back, looking for a bounce, and then resume this breakout trend. Okay, but this is going to be my target, and we have some major highs all the way up into this 4,600. That goes back to like 2016 and 2022, I believe, or maybe 2020. There you go. So that high is 2016, that high is 2020. So those stand out where if prices are going to do some type of, test or sweep of these highs, that would be, we're already starting to show the signs of it. And let's see if we make that run towards those highs and just kind of stay maintained above 38.50 or so, 3,800, 37.50 is kind of my line in the sand. If I was going to say, you know what, it doesn't look as valid. But if we stay above 4,000, I've got no problem hanging on to this trade bullish. Okay. Good. All right, let me get some other ones. So that's dollar related things. Euro dollar, I'm not doing anything on right now. We're hanging out around that 105 level. If everyone was, watching support, I know we had a nasty flush down to 103.30, but we came all the way back to 105 and change. So there was enough to kind of dollar cost average into that 105 area and still have an opportunity to be right, which is good. I'm not doing anything on euro dollar at this time. I've talked about this all week. If there's another opportunity to go lower, let's say this is, 1, 2, 3, 4, 5. If we have a fifth wave that pushes this down towards parity again, I'm going to start. I'm going to wait. If the euro dollar pushes down towards parity or lower, I'm going to start scooping up some buy levels in here. So I would say, parity to 97.50 to even 96 or 9,500, kind of scale into 3 small trades and then stack these back up for a run to 105. I think that trade looks pretty good. But I'm going to wait and see if price ends up coming to me. Pound dollar, see if pound dollar's on. I'm getting the bounce off the trend line like I wanted. That's good. I saw the question for Swiss crosses. I'm still scalping Swiss pairs. So Aussie Swiss just looking to scoop up some lows. I'm still holding long, positive swap. That's about the only good thing going right now. But some scalping on some robots. It's just a buy only robot that scoops up little support levels. CAD Swiss, same thing. Euro Swiss, we're sitting with some really choppy daily candles here. We did have a little flash during that PMI news last week or the week before. And, we're holding some pretty strong support levels around 9,200. Structure wise on the Euro Swiss, I would say this. I think we have to go out of this little wedge. Does that make sense? Look, price can do a lot of nothing, but next week we do have ECB rate decision as well as the Swiss National Bank. So both of those central banks have rate decisions next week. We also have Aussie. We also have the Canadian dollar. We also have the Fed, and we also have the Bank of Japan on the 18th and 19th. So we have 6 central bank rate decisions in the next 2 weeks. That's a lot for the market to digest. Price action wise on Euro Swiss, I'm still holding long Euro Swiss. I'm holding long for positive swap, but I think this is a pretty good looking wedge. As long as price doesn't go aggressively bearish, I'm just looking at this area to kind of hold and hang out. And then once this thing is done, I'm just looking for a price pattern. If we get something that looks a little bit more bullish, starts to get above my moving averages here, starts to break some structure and take out previous highs, then I'm looking for this thing to make its way back up towards this 9,900 zone. So my profit target is going to be 99. Ideally, I'd say 1.00. I'm stacked into, I've got 2 years of positions on Euro Swiss that, basically I bought the lows, bought some trend lines and stacked it up, pulled back again, bought back again, bought back again. Now I'm waiting. So in the slew of orders that I do have, I'm just waiting to see if and when the structure break, is there another opportunity that I can have to add to this, and my bigger profit's going to be 99 to 100. So 99.00 to 1.00 is going to be my profit target. I'm just going to, wait for price to, confirm. Don't add too quickly. And then once we get up here, I think that's a good area to say, okay, I can get bullish. If we revisit this level, I'll turn enough of these trades into winners. In fact, they'll all be winners. And I'll just take that big chunk of profit on the whole core position. Okay. All right. Good stuff. So that's Euro Swiss. Euro Pound, I'm still holding a long position on Euro Pound. Right now, just kind of hanging out in a small drawdown. I'm down $40. Swiss Yen. Swiss Yen is pulling back a little bit. I'm just going to hang on to this one for a symmetry trade in this yellow box down to 164. We'll see what happens. Okay. Watching some SPY levels closely. LLY. I have a 111 trade here. This is out to January. I have a trade running. This is part of the Pulver Alerts. I did a 700 by 690 by 600. It's an income trade. I don't really necessarily want to own the shares, but I was looking for price to stay basically greater than 600 by January 17th. And if it does that, I'll make $1.90 per contract. So, I mean, the probability of that trade to me is pretty solid. After such a, kind of exponential rip here, I could see Eli Lilly offering some, some volatility, some chop, and that's fine. But my 111 trade is kind of out of the way, and I'm kind of cushioned to the downside. Like I said, I'm not intending to own the stock. I was just trying to keep price far enough out there. Best trade on that one, Trader Yen Journey's asking about Forex pairs and positive swap. Just think about the central bank rates. Best way, I mean, you can check with your broker and just ask for a list, but to me, it's common knowledge to look at what the official cash rates are for these central banks. So if you go to this website, cbrates.com, it looks a little old school, but if you take a look and see, like, where are the central bank rates? So, BOC is at 3.75. Well, if I'm holding, dollar CAD long, the US is at 4.5. Even if they cut rates another 25 basis points, a 4.25 versus a 3.75 is positive swap if I'm dollar CAD long. Okay, everything against the Swiss. So Australia is at 4.35. If they pause next week and maintain 4.35 versus Switzerland, which is at 1%, that's positive swap. Right? Right now, everybody is positive swap against the Japanese yen. I just don't want to trade the Japanese yen. I think there's too much kind of fundamental nonsense that's going on. We're going to have some wild and crazy like intervention move by the end of the year. Are we going to see some type of BOJ move that's piggybacking on the Fed on the 18th? I'm not sure. So give me 1 second here. Okay. But that's where you can check it. So cbrates.com gives you all the official cash rates for these banks. And then this changes, when they make a decision. Like I said, we have 6 rate decisions coming in 2 weeks. So if there's any changes, any cuts, and right now there's no forecast. If we go to the calendar, pretty sure there's no forecast for any of these until next week. So next week, cash rate forecast would be a pause for RBA. BOC, there's no forecast. So I don't know if they're going to cut rates or pause. I would assume pause. Very few central banks are talking about cutting right now. The ECB might cut. Swiss National Bank, they're at 1%. I don't think they're going to do anything. ECB, they might cut 25 basis points and stop. I read that this week that they might do another 25 cut and then be done. So, does the market see any type of move on these currencies? Maybe, and we have also inflation data next week on the U.S. with CPI on Wednesday and PPI on Thursday. So we could see some decent volatility in the markets next week if data is, disappointing in the U.S. We've been on a heck of a hot streak with the U.S. The U.S. right now, global market cap and the US alone is 63%. That's crazy. Like total market cap, all ETFs, all indexes, all stock market, total market cap is 63% in the US. That's huge. Japan is second with 5%. Like US is just clearly a dominating force in the equities market. But yeah, I mean, we'll see if the streak continues. Okay. All right. How will non-farm payroll affect it? I don't know. It'll probably be noisy like it always is. You know, all I'm going to do on non-farm payroll is watch currency strength and see is there anything that's actionable. So what's happening in real time? You know, watch my dollar pairs. The one of my favorite trades during non-farm payroll is not trading the dollar, but watching the Canadian dollar. You know, the CAD, the little neighbor to the north. No offense to Canadians. You know, they have employment news as well, and not a lot of traders pay attention to the fact that the Euro CAD can move a decent amount, the Pound CAD can move a decent amount. You know, CAD Swiss, Aussie CAD, New Zealand CAD. I mean, I'll be watching those too. So that can be a little bit easier to trade sometimes than the dollar. Dollar's super liquid, but dollar also gets very, very choppy and messy during non-farm payroll. So just be careful. I don't know. I mean, it's just a noisy event. You know, it's chop. Look at the 1 minute chart. We typically see like a big breakout candle, then a fill of that candle. You know, traders that are straddling on both sides, or you know, putting buy stop orders above and buy stop or sell stop orders below, get filled on both trades and end up getting, you know, stopped out on both. It's just a messy kind of liquidity sweep type trade. So it could be very disruptive, right? Or interruptive, I suppose. Okay, what else? Personal opinion on gold. I like gold long. I like Bitcoin long. I just want to see a better price. You know, gold has done nothing for 7 days, so who cares? I'm saying that gold can still pull back into 25 and 2400. We've had a really nice run to the upside. If we have a correction, I'm just looking for a simple A, B, C to D. We settle into like 25 or 2400, then I'll look to see if we bottom out. I'll look for some opportunities to add more positions on GC for futures, GLD for the ETF, and same thing on silver. It's really well supported at 26, so I'm just going to level in. I'm you know, medium to long term bullish on gold and silver. Okay. Chinese ETFs. I'm not in many Chinese ETFs. I'm in FXI and KWeb only. KWeb is large cap tech. FXI is large cap tech, and KWeb is just a tech ETF. So they're up a little bit on the day, which is good. Baidu making a nice little run at 2% up, but still, Baidu's also given back the entire rip that we saw from September. So look, the reason these are on my watch list is because I have exposure in all of these. I have shares in Alibaba and Baidu. I do have some shares in FXI. I have options on KWeb, and I have a trade with some ownership and some covered calls on JD. So I'm still in these stocks, but I've turned them into initially what was like, hey, this September thing is the real deal. Let's see if there's any follow through. Where I was like, let's hang on to some pretty big profit potential, to now, all right, let's just repair these for some income. You know, so I mean, if I can flip Alibaba and Baidu for $500 to $1,000 per account, I'll do that. If I can flip JD for, I think I've got a trade right now that if it gets to $38 or $38.50, I'll flip it for like $650 or something like that. So, I mean, to make a couple $1,000s per account, I'll be happy with that. And then I'll reassess the whole situation. You know, I mean, I don't mind the technical side. If there's continued this kind of continued effort to like lift animal spirits in China, then I'd like to think that this major support level that comes back into this area, you know, carves out some levels, maybe rounds out this bottom, and then has some room to run, you know, back up here towards 150 to 160. I mean, fundamentally, that's what nobody understands or nobody trusts. It's like nobody trusts a China stock. I mean, I get it. I don't know how to make sure that the fundamentals in the books and everything fundamentally is strong and legit. But these stocks valuation wise are cheap enough, and technically they're asymmetric, and honestly, sentiment wise, nobody likes China. So to me, that is a good opportunity where nobody likes it, nobody wants to invest into it. So I'm taking some stabs through options, and I'm giving myself some good upside potential, and I'll continue to take some stabs at it. Okay. All right. Natural gas. I mean, oil and natural gas, I think, are pretty vulnerable going into 2025. Let me see where they're sitting up here. So I've got CL, 68.58. This is crude light futures. We haven't really done a great job of holding above $70. It keeps making lower highs. We keep making equal lows. I do have a debit spread right now on CL. I'm just trying to be mindful of if the floor breaks, down we go. If the floor holds, up we go. I mean, like price is going to have to make a decision. I just don't know what that decision is. We have had a lot of pressure on oil all year, and this seems to be the floor. And so this decision is getting tighter and tighter and tighter. So this either squeezes to the upside with like a bear trap fake out trade, or this breaks the floor and then drops with a flood of supply in the market, because what's the US going to do in 2025? Probably drill more domestically, drill more globally. Whether OPEC likes it or not, Saudi Arabia wants lower prices and bigger market share, and Saudi Arabia, the U.S. are the two countries that produce the most and also have the best margins, where they can have oil at $45 a barrel, $40 a barrel, and still be profitable. It's not greatly profitable, but it's enough to squeeze the OPEC cartel, if you will. So I'm just watching. I mean, it's going to be an interesting like price action play on oil to see. The big story too with this is energy prices in the U.S. If oil prices are higher, inflation remains very sticky. Okay, right now, like services inflation is still really high. Transportation is still high. Healthcare costs are still high. House costs are still high. It's like inflation sticky in the U.S. Data comes out next week on Wednesday, Thursday. I would be shocked if we have lower inflation prints next week. And if we don't, that's going to be 2 or 3 months in a row that we're printing slightly higher inflation. And then we're no better off than where we were in July in 2023, where we're sitting right back around that 3% level. Right? So anyway, Euro pound position, how do you mitigate the cost of negative swaps? By being long against the Swiss and having a ton of positive swaps. So Euro pound is just a trade. I'm not really, position trading that one. I've got one trade in. So I've got one position versus, I've got 20 plus positions in dollar Swiss. I've got 20 plus positions in Euro Swiss. I've got at least a dozen positions in on CAD Swiss. So those positive swaps will, clearly overshadow a one or two leg trade in a Euro pound or something that's negligible. Okay. All right. So talks on gold. I would like gold to settle back into this 25 to 2400 zone. I'm going to start scooping up some more. I'll add some more shares of GLD. I'll add some futures contracts as well. Silver still pretty well supported around the 200 moving average, which is around 29.25, and also very well supported technically at $26. So I'll just be patient on adding more shares to SLV or adding any futures contracts there. Bitcoin, a little bit of rejection, but we stretched all the way to 103.6. Not bad. Not bad on old Bitcoin. So, the story continues. I have this yellow box is measured up to around 108. So that's my symmetry target. This doesn't mean it has to be a top. We could just, I don't know, we could pull back, right? We could have, we poke up here with some divergence. We pull back in with some support. And we have another rip high. Walmart hit my level at 95 as expected. Very nice. How's the inflation data affect gold? Same way it's been affecting it all last year. If inflation's getting hotter, gold probably has maintained bid. I also think that the bigger story on gold is what the dollar is going to do. If the globe is trying to move away from the dollar and being this, world reserve currency, or gold as a store of value, gold's going to maintain bid by central banks when they're trying to get away from U.S. debt. So I think it's more of it's more than an inflation story. It's also a non-dollar story. Same thing with Bitcoin. Just alternatives are getting more and more attractive for emerging markets and countries that have been. If you've ever read anything on the milkshake theory, when we have times of crisis and we have all this like dried up liquidity, it all goes back into the dollar and it all flows back into U.S. Treasuries and bonds, and that destroys emerging markets. That destroys countries that are getting crushed by a stronger dollar, and so that's where these alternatives are gaining more and more traction. Okay. So we'll see. I mean, and look, I'm not going to go down this rabbit hole of like, I've seen reports literally on the dollar's going to fail for over 20 years. It hasn't failed yet, So I think that's all, I don't know. That's clickbait. That's the narrative that gets everyone, galvanized because it seems emotional. Your money's not safe. It's like, look, if we don't have the ability to be safe in the financial markets, then I guess there's no way to trade. So, look, there's a lot of money to be made. It's been a wealth generating vehicle for over a century, you know, and I know the problem that we have is there's a lot of debt. I mean, for I don't know the numbers, but for like $100 trillion in GDP for the globe, there's like 300 to 400 trillion in derivatives and over and like basically leverage debt. So it's a scary thought when these numbers are just like unfathomable. Blah, blah, blah. They're unbelievable numbers, right? But we're all in the same boat, right? Debt to GDP for the US is 120%, 121%. Debt to GDP in the Eurozone, debt to GDP in Japan, debt to GDP, it's like they're all the same. It's all crazy amounts of debt. It's all funny money. So I don't know what the end is. I don't know what the creative accounting is going to be to avoid some type of reality check. So I just trade. Like I said, if I live in a world where the financial markets don't exist, it's a very different world. So for those of you that have canned goods and bunkers that you can survive and get ready for the zombie apocalypse, then maybe you'd be in good shape. But that's not really the world I want to live in. Walking Dead is not my idea of where I'm like, let's go. I want to trade and I want to generate income and I want to provide and have a job that's recession-proof and a job that I can make money on, whether it's bull or bear markets. That's what I want to do. So I don't get stuck in the doom and gloom. I don't get stuck in the euphoria. I'm in the trenches just trying to grind out profits. All right. So we got a lot of active traders in the chat today, but look, like a trade, take a trade. If you want to learn how to trade and be risk defined, learn how to trade options. So I mean, that's probably the best thing I can give anybody instead of speculating and leveraging. It's like just be risk defined and take a bunch of trades. Options allows me to do that. That's why 90% of my portfolio is option trading. It's easy. You learn a couple of concepts, you learn a couple of core strategies. You can be directional. You've got 3, 4, 5 ways to win. It is like playing chess in the markets, which it feels pretty good when the asset can go to infinity or go to zero, and I can risk the exact same amount or gain the exact same amount. That's a pretty good asset to trade. You can craft a lot of great strategies that way. All right. Videos on YouTube. Yeah, I've got my channel has a bunch of videos, youtube.com/Chris Pulver Trading, or youtube.com/Chris Pulver. I got a bunch of videos, keep it seriously simple, trading 101, bunch of stuff like that. And then with these sessions, I'm live every day. I've got a final hour session at 3 p.m. that I'm live every day. And yeah, there's a lot of content. So check it out. Also have, the Pulver Alerts through A1 Trading for my trades. I have a couple of other services and also have a couple of options courses. One's $27 called Practical Options, and that's like the quick and dirty version of options with 6 strategies. And I've got a full blown course that's $497, which has 11 videos and 13 strategies. So I'm trying to help as many people as I can. Practical Options. I just did this one. I'm working on another couple of courses: Practical Forex, Practical Futures. I mean, it's just I think traders get stuck in some bad habits and traders make some terrible mistakes. They lose a lot of money up front, and it's hard to justify like, oh, all I had was $10,000 and now I lost it. It's like if you think about trading as a game of survival, it's a lot easier to make money. If you care about your bottom line, you care about protecting your capital, it's a lot easier to grow your money when you're not losing it a bunch. So, I mean, the trader that comes in swinging for the fences every single day at, 5% risk or 10% risk, that trader, give me 6 months to 12 months, that trader's probably not around. But the trader that's 1% or less, you survive. You give yourself a big, wide margin for error. You survive and you see the market do the same thing over again. Traders don't have difficulty finding trades and finding direction. They typically have a problem managing risk. That's usually what traders' pitfall is. They manage risk like crap, So survive, don't lose money, protect that bottom line, and just show that over a sample size, you gain along the way. It's easier to make money, All right, good stuff. Okay, what else? We did oil, we did gold, we did Bitcoin. All your peripherals are doing pretty well. BITO is up to some highs, IBIT up to some fresh highs. It's interesting. I did measure this. Obviously, I was off a little bit, but I measured approximately the gain that if Bitcoin did hit 100,000, that my IBIT, which is the BlackRock ETF, would be sitting around like $61.50. We've hit 100K. We're at 101. We hit 103. And we stretched up here towards about $59. Now, I was just a little bit off. Does that mean that I'm taking profit on IBIT? Not at all. I'm still in here for credit spreads. I'm still in here for ownership. I think my IBIT trades up about 40 grand right now. IBIT is up around $43,800 and still room to run. My BITO is up around $24,000. My Coinbase trade is up around $5,300. My micro strategy is up around $8,500. So obviously I have some exposure. My Ethereum trades, it's just EETH. That's up around $9,400. So I've got some good profits between gold, silver, and Bitcoin, turning about a 10 to 15% allocation of my portfolio into, 10% gains for the entire bottom line. Like that's pretty good, So I'm going to maintain the exposure. I'll stay patient. I like dollar cost averaging into IBIT. And since this was approved with the CFTC and OCC and SEC, now you can trade options on it. Okay. So I don't mind that at all. FBTC, same thing. This one's a little bit more expensive than IBIT. So I'm just going to BlackRock, MicroStrategy. A lot of volatility today, gapped up towards, my gosh, we gapped up to 440 and we've dropped about $40 to $43 on the day. So that's a lot of volatility on old MicroStrategy. Coinbase gapped up. It's fading a little bit, but I'm still sitting here with a 220 by 230, a 111 trade as well. So some good income that's looking good for December, January. Ethereum has been actually outperforming Bitcoin. If you look at the two, Bitcoin versus Ethereum, we've been actually trending lower since the end of November. So Ethereum's been, kind of the catch-up currency over Bitcoin, which, it's good when they're both rallying, right? When Bitcoin's making its way up to 100K and Ethereum is trying to come back to 4,000. We hit 39.54 today. We have previous highs back in March of this year, and then the all-time highs go back to 2021. That was when the tech market topped out. Kind of wild ride, right? Like we've been in a drawdown this entire time. But look, is this, and maybe this is wishful thinking, but what if this is a monster like head and shoulders trade? Left shoulder, head to neckline, like what a great setup. If we get a pullback, what a great setup we could have here on Ethereum to make a run, back up to all-time highs. So there'd be ways that I'd like to look for a pullback and then express a long position, or we just continue to have the catch-up trade and Ethereum looks good to the upside. So to trade that, you can obviously, hold your coins and watch the appreciation, or there's a couple of ETFs you can trade on Ethereum, which I've got them right here, EETH and ETHA. I don't mind either one of those. Copper, no trade there. Unless China really wakes up and starts to lift animal spirits again, I'm going to stay out of copper. Japanese yen futures, nothing on this one outside of maybe a retest of these lows. If we came back down to retest these lows on Japanese yen futures, I'm getting long. I'll do debit spreads. I'll do credit spreads. I'll make defined risk, but I will stack up, maybe, 1 to 3% risk down here with options and then have that turn into a 1 to 3% gain. Nikkei, I actually went long the Nikkei this week. I bought some shares of EWJ. I bought a $1,500 tranche, and I'm just going to look to see if the Nikkei will continue to try to get through whatever this chop is. So I'm buying the Nikkei basically right here. That's area 1, and down here, area 2. If we hit all-time highs, later this year, which probably not later this year, but even into 2025, if we make a run through these highs, I've already measured this move out on the Nikkei for a potential double-digit gain. So if we go to hit that measure move, that's another 18 to 19% to the upside. That would be pretty good. I don't know if anybody recognizes this, but the Nikkei at one point was outperforming the U.S. markets this year. The Nikkei was like the best performing index in the world until it wasn't. And that, massive deleveraging that the Japanese yen saw from July to August was very disruptive on the Nikkei. But I still think that we have this high, this low, lots and lots of garbage trading in here that's just trying to build some type of accumulation until it's ready to, make another run to the highs. So I'm in here for area one. Like I said, if we come back to revisit this low, why would I buy more Nikkei down at these lows? Because it's a 27% discount. If anyone had a 27% discount in the S&P, would you buy it? I would. If you had a 27% discount on the NASDAQ, would you buy it? I would. So that's why I'm saying if I took, chunk one and chunk two, dollar cost average in, if we ever get back to those highs, you can turn that into a pretty nice gain. Okay. Pound Swiss, I'm long, but I'm not trading for this week. I'm trading for longer term. My bigger picture trade is Pound Swiss going to 120, so I'm just hanging on to it. You're not going to get a lot of trades out of me that's like, what's it doing this week? I don't care. My trades in Forex are usually, in the making of like weeks at a time, months at a time. And I trade open spaces where I can generate, hundreds and hundreds and hundreds of pips of gains. So I'm not interested in the small, tiny moves. I want big open spaces where I can stack orders up and I can dollar cost average and position myself for higher probability trades and, a lot less noise on the higher time frames. Okay. All right. What else? Check the Mag 7. We're getting a pullback on Apple. Still looking at the SPY today. It's at 606.99 current price. 608.25 was the high. We faded off those highs a little bit. Just watching some order flows today. We'll see what happens. Apple fading off the highs. Amazon near the all-time highs. We hit 220 yesterday. Google looking okay. I needed to stay above 155. Meta at all-time highs, but fading a little bit today. Man, I'd like some Meta. I want to see. I mean, I've got an income play down here. If we can somehow get a pullback trade into, these moving averages, I'll probably start adding another 111 trade. And maybe even say, look, I like it enough. I'll just throw $1,000 to $2,000 at it and just buy some partial shares. Maybe not trade options on it, but dollar cost average into it, and then use options for income. But I'm just gonna wait. I mean, I just don't feel like as much cash as I have. Yep, Walmart's at all-time highs. We hit 95 this week. That's good. I took well, actually, let me see what this is trading for right now. Walmart is trading at 95.20. Let me see what my call option is. Oh my gosh, you got to be kidding me, dude. Son of a bee. So I close out a trade for profit at 77 cents. It's now trading for $1.12. That's a big sacrifice from my end. And then $1.18 is now trading for $1.73. Son of a gun. Well, that must have been a nice little squeeze on Walmart today. So Walmart did have a nice pop to the upside, and I guess I should have hung on to it. So my delta's up, my gamma's up, and that would have been a nice profitable trade. So it was. Look, it's already in. I've got this credit spread that's still going to be looking good for profit. See if I can turn this one. Oh baby, I'm going to close this thing down for 3 cents. Give me a 2-cent trade. Let me close this thing down. 2 cents, 3 cents is the ask price. Close this thing down. Don't be an idiot, Walmart. Come on, Tasty, you're better than that. Give me a fill at 3 cents. 4 cents debit. What? That's weird. I mean, it doesn't matter. I'm going to cancel the trade. So I have a 93 by 92 bull put spread. There is a 93% chance it stays out of the money for full profit. I collected 43 cents on that trade. Was it more than that? Maybe it was 43 cents. I think it was 43 cents. WMT. Yeah. So there's about a 97% chance that I keep that full 43 cents, which is going to be about a 80+% return on capital. I was looking to see if I can close it out right now for like a 1 cent or 2 cent debit. Then I was just going to take the profit, move on. But if it won't fill me at 2 or 3 cents, then I'm not gonna beg. I'll just let it stay out of the money. But yeah, Walmart's made a nice run. This is another stock. I mean, look, Walmart's never really moved like this. It's never really moved like this. I mean, seriously, going back to like even this stretch in 2017 and 2018, we've had a lot more dips and pullbacks. Look at this thing. Freaking exponential. I mean, I have been trying to get my hands on Walmart all year long with option trades, and I have had no luck getting filled on ownership. I've wanted to play this thing since the 50s and 60s to take some shares, do some credit spreads, get assigned some shares, sell puts, like nothing. Now it's not a bad thing. It just means that there's income that I've generated the entire time. But for a stock that's up from where I wanted to start participating here, I mean, starting to participate at these highs at 56, this thing's up 67%. So, I've got to make a lot of income trades there to kind of make up for what would be just if I had the stock and it was up 67%, that'd be pretty exciting. This is another one that also is, much as I like the stock, it's a bit overstretched. It's technically probably due for a correction. And this doesn't mean I'm calling the top. I'm just going to say I'm waiting for a dip. If we have a dip on Walmart, I'm going to scoop up some more Walmart. But I'm not going to participate when this thing's just ripping to the upside. Now, that being said, I still have ratio spreads and credit spreads and debit spreads and all sorts of stuff that are making me money. But that's not the same as just taking the shares and sitting on them for, $30 to $40 gain. But still, a dip or a pullback, I like Walmart. That's one that's going to be a, forever stock in the portfolio. So pretty simple, but crazy, right? The stock is just ripping to the upside. All right. What else we have? Microsoft looking better. We're at 438. I'm trying to get this one. As long as we stay by the end of the year, this is only a couple weeks out, but if we stay above 435, that'll be a nice little trade. Let me see if Microsoft is in profit right now. Microsoft. Let's see here. That is a ratio spread. That's actually, what is this trade? It's not a butterfly. I think that is buy a put. That's a ratio spread. Oh, never mind. Hang on. So this is a ratio spread. This is a 10 wide bull put spread, and this is a 5 wide bull call spread. So I'm up about $700 right now, and I mean, profit levels are looking pretty promising. This one I was looking to see. So 12. So I got in for 3. No way. I didn't trade this for 350, did I? That's a terrible trade. The 430 by 435. There's no way I got it. Should have been like a 265 debit. 265 debit. Huh. Oh, never mind. Trade price. I was looking at the wrong thing. I'm looking at the ask price. Here's the trade price. Should be 265. So 1924 minus 1660. Yeah, 264 to 265 debit. And right now my credit would be maxed out at $5, and it's trading for 345. So I'm just gonna let this thing hopefully do its best to go higher. And this credit that I'm showing right now gets up to $5. So I'll let that be an income trade on Microsoft. Netflix, we're at fresh all-time highs again today on Netflix. Congratulations, that's awesome. Again, a lot of income trades, not a lot of ownership. I want a dip, I want a pullback. I would love that. In fact, I just don't have it. So I'll wait. We have this big stretch away from the 200 moving average. If we get any pullbacks, I will be gladly looking for more Netflix to add, but nothing right now. I can't justify adding at these freaking highs when we're stretched away. We haven't had a touch of this 200 moving average since that gap higher. That's now 284 bars. Percentage wise as well, that's a pretty big move. We're 26% overstretched. That seems like a lot. So I'm just going to wait and see if we have a pullback. Nvidia 145 this week. I had a nice little trade. It was a 138 by 139 bull put spread. Got some credit spreads as well. This is also a stock I'd consider taking some ownership of. But if we stay above all my levels and they close out of the money, that's just more income. Tesla at 370, also eking out some fresh highs. A lot of income trades here too. Berkshire Hathaway, I'm going to wait and see if I set a chart alarm here at 442. Bond-wise, 10-year bond is up a little bit today by 0.55. Look, I still think this before I go today. 10-year yield going higher is not good for the stock market. 10-year yield going lower is good for the stock market. If I'm going to summarize, future growth and the strength of the U.S. economy and the strength of the U.S. consumer in one chart, it is this chart right here. Everybody that's buying a car, everybody that's buying a house, everyone that's doing any type of refinancing and student loans or refinancing in business, whatever it is, this is going to be what it's based on. So this going lower is better for the consumer. and better for growth opportunities. This going higher is not. So if this 10-year is going to just hang out here, okay, fine. But if we have a directional move, it's going to have some consequences, positive or negative. So just saying, just watch that. Okay. All right. Palo Alto, I haven't looked at that one in a second. 405. I mean, that one made a quick recovery. I was in Palo Alto initially when this bottom happened. I was in here with a bunch of income trades, and those worked out pretty nicely. So yeah, I'm not doing anything on this one right now. So all right, I think that's going to do it for me today. Got some China exposure to the upside, except for Alibaba. I need JD to get above 38.50. Yeah, we'll see. I'm going to stay pretty patient on that. Pfizer is another one that I need to keep a close eye on. Pfizer is at 25.42. My break even is like 24.70 or 24.50 on a call option. I'm likely not going to take the assignment or exercise the option, but I'm just trying to sell some premium against it. I go out to January on these trades. TFX 188. I mean, technically looks okay. I mean, as far as like a good level, I'm just a little skeptical of, what is the deal with this stock not performing well? There's support in here, but let me check it fundamentally. So TFX is what? Teleflex. I mean, that looks pretty good. Price to earnings, price to sales, a little bit high in the price to earnings. Let's check it against its peers. I mean, that's a lot of upside potential on discounted cash flow, which is nice. Peer average is 80 for their price to earnings, and they're trading at 36. Not a bad trade. Let me see what the IBX is. Let's go TFX. We're trading with an IV rank of 44.8. It's not a stock that I necessarily want to own, but could I do something income-wise, sitting at these support levels? Could probably do a defined risk trade. I mean, that's 2023, that's 2022. COVID lows, we're trading below COVID lows, which is interesting. Let me see. Let me check the 111 situation and also the buying power. So let me look at like a 60 to 90-day trade. What I don't love is they have monthly expirations only. That's not ideal. If I were to go out to January, it's 43 days out. Premiums aren't that great with $5 wide strikes. Credit spread, collecting $1, risking $4. It's a little crappy. I mean, I could do a 180 by 175 perhaps. Somehow pull in less credit. The bid ask is super, super wide. I don't know, man. I mean, maybe it's just me. Like, I don't see it being a good option trade. It actually, in fact, might be better just to buy a little chunk of shares, like buy a couple $1,000s worth of shares and just see if that's the proper investment. Because option wise, I'm just not going to get what I like. If I want to do, okay, I'll sell a put. Well, it's going to cost me. I mean, if it's a cash account, it's going to be $17,000 required to make $70 income. That's a terrible trade, right? And the 170 and the 175, the bid price is the same. That's garbage. You're only getting like a couple of dollars for the stock on option. So anyway, option wise, it looks terrible. But technically speaking, I like where it's at. I guess the problem is if I just throw money at it, I don't really have any protection to the downside. I mean, I can buy a put, but that's just going to chip away at my overall debit. So I don't know, man. Daniel, you can't really talk me into it. Usually, I mean, if you point out a good trade and I like it, I'll throw an option trade on it. But I don't. I like this. I think this looks promising and encouraging. But unfortunately, I don't see a good way to trade it when the options chain and the strikes are so bad. So I don't know, man. Keep an eye on it. But there's pros and cons. So, okay. I'll do this. Any other questions? Any other charts? What else are we looking at today? Tomorrow morning, there's non-farm payroll, 8:30 a.m. Eastern time for the U.S. We also have CAD numbers as well. That's always a nice little plan B to trade. It's kind of out of the, it's in the peripheral. It's kind of out of the focus of what the market typically does on a Friday morning for non-farm, which is be noisy around the dollar. SPY wise today, everything's still in red slightly, down about 0.1%. Qs are down same 0.1%. Dow's down 0.28. Russell down 0.60. So, yeah, a little bit of red in the day. Dollar index still slightly softer. Watching that 67 floor on oil. If we break above 70, just oil's going to have to make a decision here sooner or later. If oil ends up going lower, I'm curious where natural gas goes as well. Another one that's probably just unlimited drilling, trying to put as much supply in the market as possible. So this is another chart that, if we came back to these floors, $2 or less on NG, I'm going to start establishing some futures positions there. Gold, I'm waiting for a pullback. I'll just, buy at 25 or 2,400. Silver's pretty solid. Bitcoin, the story remains. I've got symmetry around 107 to 108,000. And there could be a little bit of a profit reaction there. There could be some symmetry. But, the amount of inflows that are coming into the major ETFs and the inflows that are coming into Bitcoin. I mean, Bitcoin within a year has actually accumulated more market cap than GLD. It took GLD like 8 or 9 years to accumulate the market cap that it has, and it took Bitcoin less than a year. So it's pretty nuts. I would say a highly accelerated, instrument, but it represents a lot of things. It's an alternative. There's limited supply, right? It's 21 million, so there's scarcity at some point. There's no more Bitcoin available at some point, but it's still risk capital. I still keep saying that. Okay. Let's see here. Do you always select positive swap trades? No, because we don't always have positive swap. We had a decade where there was zero swap in the markets. Brokers didn't give you anything. From like 2015, 16, 17, when interest rates were cut to next to nothing, 2020, when interest rates were cut to nothing, there was no swap in the market. So, when you're in periods like that, you just got to trade. But when you have positive swap, I do tend to favor the way that I trade is I tend to be in positions for, weeks at a time or months at a time. And so when it comes to that, I'm a little bit more conscious of, do I like the technicals? Plus, do I get some positive swap? I like that trade a little bit more when the swap is available. But it depends on, what liquidity providers are doing to then pay the broker to then pay us. We're the last to get paid. So, and I say that because all the central banks were raising rates in creating these positive swaps in 2022, and my broker platform was not. And I was actually really pissed about Forex trading in 2022 because I started this Swiss campaign early. Anyway, it doesn't matter. It's paid for itself in a big way now, but still it was frustrating. But because I have positive swap, yeah, it's a factor in what I do. All right. That being said, it's 11:15. I'll let you go. Tomorrow morning, non-farm payroll. Let's see what happens for the rest of the day. I'll be back live on my own channel, youtube.com/ChrisForward at 3 p.m. if you want to join me for a final hour session. So far, pretty good trades for the week. And we'll see you soon. All right. Thanks. Bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.